All right, everything looking good on my end. Let's go ahead and get this stream started. Yeah, sorry I didn't give you guys a little more heads up on the actual scheduled stream. So might be a couple late arrivals. That is my apology. I got a little carried away working on the new version of the Jewel Thief. Just about finished up with it. Just got to go through and make some final finishing touches. But it is looking sexy as ever. So, yep. Let's go ahead and get this stream started official style. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 and some change p.m. Eastern Standard Time on January 2nd, 2022. Oh man, does it sound crazy saying that? First stream of the year, 2022 is officially here. Who'da thunk it? What happened to 2020 and 2021? I don't know, but we're in 2022 now. So before we do get started though, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research. And of course, trade responsibly. All right, but yeah, let's go ahead and jump right in, get it started. So obviously, if there's ever a time of year where we would expect for there to be a pivot in one direction or the other, this is it. So it's pivot time, and when I say a pivot, it could literally be continuation or it could be a reversal. But if there's one time of year that it's more likely to see a pivot in different markets, and I'm not talking about one market or another. I mean, we could literally see gold go parabolic and everything else that's been pumping crash. We could see everything that's been pumping keep pumping. We could see everything pump, everything crash. Who knows what's going to happen? But the likelihood of there being a game-changing event at like the beginning or the end of a year or a quarter or a month is like exponentially stronger on longer time frames. So when we get to these key pivots like end of the year and we have catalysts like tax loss harvesting or taking profits on your portfolio to lock in gains, or potential tax increases or Fed rate hikes, or tapering, all these different things, that's when they really start to materialize. So the market can price in everything it wants for as long as it wants, but the truth is, it really starts to materialize when it becomes like an actual thing in the markets based on those like swings, those periods of time. And typically the longer the time frame, the more likely that is to occur. So the same way that we like rebalance every quarter, you expect like the rebalancing at the end of the year, the taking profits, the tax loss harvesting, all that stuff to be like exponentially more powerful. So this is the time. And to tell you the truth, we're seeing basically, we're getting clues from some of these markets that we're likely to see some pivots play out. So we've been displaying quite a bit of bearish divergence on a bunch of our different assets. And also we've been showing quite a few, things that have just gotten absolutely hammered or consolidated sideways or just beaten down to an absolute pulp. And the likelihood of those things recovering now seems more likely than not. We talked about specifically how we expected concentration into the strongest names, indexes, but like specific stocks going into the end of the year. And, then some light selling. And we saw exactly that happen. So, essentially, if somebody is upside down in one of these stocks or cryptos or whatever, they can harvest that loss, use it to offset some of their gains. And then you see mild selling in some of the more powerful stocks. And then you see exponential like capitulation selling in things that have gotten beaten down as more and more people want to take the L on these things. Well, they don't want to take the L, but they want to lock in the L to offset their W's. And I think that's exactly what we ended up. I mean, not even I think, that's exactly what we ended up seeing. We saw a bunch of these like high flyer tech names that have no profits just get absolutely hammered, into the dirt. I mean, beat down into the dirt and bloodied, left for dead. So is it possible we see some of those things recover? Is it possible some of them just go straight to zero? Both those, definitely a possibility. And matter of fact, I would legitimately be willing to bet that some are going to do exactly that. Some are going to rebound and be strong for the next few months, years, whatever. Other ones are just going to literally, curl up and just bleed out and die. So, which ones? Well, we got to figure that out. We got to let the market tell us. So, but, we saw bearish divergence playing out on crypto on weekly time frames, on the total crypto market cap, on Bitcoin itself, on quite a few altcoins. Lots of the cryptos are off their highs, substantially, some more than others. We see that happening with the major indexes. Dow Jones, bearish divergence on the weekly. S&P, bearish divergence on the weekly. NASDAQ, 75% of it is below its 200-day moving average. Absolutely been beaten down. Russell, been trashed for an entire year. Looks like it's getting ready to just go straight to zero. I mean, there's going to be some money to be made this year. But I'm going to tell you the truth right now. People are going to lose big too, especially if we start to see a shift in these markets. Because think about how many people entered these markets over the last 2 years, and they don't know what it's like to not be able to buy the dip. They don't know what to do when you buy the dip and then you lose 50%, and then you buy the dip again and you lose 50%. And they say, well, it's already down 50% and 50%, so it can't go any lower, right? Hey, how about you get another 50% haircut? Talk to me after that, and maybe one more after that. Talk to Michael Saylor in 2000. It can't go any lower, bro. It's already at zero. What's up, brother? Good to see you, man. Yeah, I'm excited for 2022 myself. So let's jump in and rip a little bit of this technical analysis. So we see the 10-year has rallied back above the 200 exponential and simple. 200 simple started to roll over, but recovered those levels. 8 and 21 are crossing to the upside. We see a bunch of green histograms crossing over the zero line and the slope line, gaining momentum to the upside. Looks like the 10-year on the daily wants to pop up here. Looks like it wants to jump up. Let's check out our monthly. So look, we got the 821 cross in this elongated bear trend. I mean, this thing has been getting absolutely beat down and just absolutely dominated since the 1980s. Okay? Since the 1980s, the bond market has been in a parabolic uptrend and the treasury yields have been in a parabolic downtrend. And now what's happening here? Well, probably a reversion to the mean. We see it happen how many times? Beat down, reversion to the mean. Beat down, reversion to the mean. Beat down, reversion to the mean. Again. And now here, what are we doing? Possibly again. I mean, I would think likely. We're at some key resistance based on these two previous lows right here. Chopping around through those levels. But, it looks like this wants to rally up here. It looks like a temporary rejection off the bullish control zone on the jewel thief right here. Just like we saw right here. A little temporary rejection, refuel the jet, and then take off into the stratosphere, into the atmosphere. Bullish control zone, and then we top out eventually. Where are we going to top out at? Is it going to be 2.5%? Is it going to be 2%? Is it going to be, 3%? Well, we got to wait and see, but we're definitely building up momentum. And now with the 821 crossing to the upside, likelihood is we're going to see, and then take into account the fundamentals, Fed's talking about specifically raising rates. They're tapering their balance sheet. 120 billion per month in asset purchases going to stop happening or start to stop happening or happen less. I don't know how you want to word it exactly, but I mean, this thing is in the most powerful, longest beat down downtrend ever. So is it going to go to new highs? Probably not, but it looks like it's going to keep moving to the upside. We have momentum above the zero line, above the slope line. All it has to do is just literally not capitulate back down here. The slope line is going to flip back over blue. So people want to ask me, is now a good time to dollar cost average into bonds? Should I buy bonds? Should I flee to safety to bonds? Well, I don't think so. I mean, maybe it works for you, but to me, I don't want to buy the other end of this, because whatever this looks like, whatever the opposite of this is, this looks like a capitulation bottom. So, what's the bond market look like? A blow off top? Well, probably. What happens after the blow off top? Reversion to the mean, a retest of the 200 exponential and simple. So what happens with a capitulation bottom, a V bottom like this? You know what I mean? You run out of sellers, you go to zero, and then bounces back, and then reversion to the mean. And then once we get back to that mean, once we get back to a 200 exponential and simple on the monthly, then we could decide what's going to happen after that. It could very easily get rejected, come back down, sweep the lows again. Could very easily break through that and break out of, this 40-plus year downtrend. And let's keep in mind, this is the oscillating range right here, and the top of the range is the 200 exponential and simple moving average. And if we turn off log scale and just go to our traditional, we see we're just trading inside a channel meticulously, almost perfect. And where are we at? It's tough to tell because now you got to look at all my little drawing tools. But we're right smack down in the middle of the channel, getting ready to potentially break through this inverted head and shoulders. So to me, bonds don't look so safe right now. I don't know who coined the phrase or who said it first, but what people ask me about bonds right now, bonds look to me like a reward-free trade. I mean, all the risk, none of the reward. So you got to worry about, you're guaranteed locking in negative interest rates if inflation continues. So you're automatically losing money. You're going to give the government money full on knowing 100% that the government is going to give you back money that's worth less in the future. So you're for sure losing if inflation continues. And then, so that's losing. That's a lose situation right there. Here, you want to borrow some money? Sure. Hey, don't even worry about giving me all of it back. Just give me most of it back in the future, via buying power, obviously. And then, give me a pathetic interest rate that's basically useless, that's getting absolutely dwarfed 10x by inflation, assuming it's at 15%. Maybe it's 6x because inflation's at 9%. Will we persist and see quote unquote official numbers 6%, for the next 10 years? Probably not. I mean, obviously not. There'd be riots in the street. But the fact of the matter is, that's your one situation. Inflation continues and you get absolutely wrecked. What's the other situation? Well, the other situation is that the rates do rise. We end up going into like recession or depression because the economy is just being propped up by all this fake money and stimulus. And then what happens to the bond prices? The prices fall. So you lose money on your principal, or you lose money on your interest, compared to like the real rate versus, the coupon rate. So when you adjust for inflation, you either lose money in buying power or you lose money in principal. So what is the situation where you win buying bonds right now? If there is one, I don't fucking know what it is. I can't figure it out. Maybe I'm missing something, but people ask me, should I put my money in bonds? No one's putting their money in bonds. I mean, somebody is, called the Federal Reserve, but I don't think anybody else is. I mean, look at the bond auctions. I mean, there's definitely some people putting money in bonds. A lot of old school asset managers, big money, hedge funds, whatever. Sure. Nobody's running like 60-40 portfolios, maybe 80-20s. Maybe some people are just locking in that fixed income. But I mean, at what point in time, if you have volatility in the bond market, you might lose your principal. And then you have volatility in the stock market, you might lose your principal. And the stock market's been absolutely decimating the bond market. Why would you ever put your money in bonds? You wouldn't. You just go for the risk on. You go for the risky asset that's been paying you. I mean, S&P up, 26% or something, 28% last year? I mean, bonds did okay. Did they do 28%? Did you lock in, S&P paying you 2.5% dividends? Did you lock in 2.5% dividends on your bonds? Well, it depends when you got them, I guess. But, you're going to lock it in right now? No, you're not. You can get screwed. But anyway, that's my macro on it. I had some people asking me about bonds. Was now a good time to buy, etc. I don't think so. If you live in a different country, maybe, it makes sense because your currency is liable to implode or get wrecked compared to the dollar. But like when I say, and this is a distinction I want to make here real quick too. When I say that I have like large cash positions, I have temporary large cash positions. Holding a large cash position does not make sense over time because you're losing buying power. It's a fact. You can look back at the chart and the dollar's getting absolutely crushed. The DXY, or compare the dollar to like actual assets. Everything looks like it's going parabolic in prices. Houses, stocks, cryptos, but really just all the fiat currencies are losing their value. Gold looks like it's up a bunch. Maybe not recently, but if you compare 20 years ago, 30 years ago, 50 years ago to now, it's up a bunch, but is it really up or is it just maintaining your buying power? And that's what it's really all about. It's about maintaining your purchasing power. So when I say I have large cash positions, I have large cash positions because I'm ready to deploy them into the market and take advantage of big drawdowns, not just to like hold on and like put under my mattress and like chill on. And then if you think about like, if I want to have short-term cash positions so that if we do see a crash or a pullback or something like that, if I'm ready to deploy, I don't have to sell something else and then now have to, reaccumulate with my lower dollars because whatever I sold probably went down too. Because let's be real, the correlation in all these markets is extremely high. I mean, what happened during the Rona dump in the beginning? Gold went down 20%, silver went down, 40, 50%, cryptos went down 60%, S&P, Dow Jones all went down 30%. Some of the other, stocks, 60%, 70%. I mean, so where was the safe place to be? Where was the safe place to be? It was cash. It was bonds temporarily, but the bonds are not liquid in the same way that your cash is, your cash is just ready to go. So that's why, what is a bond? It's basically a future promise of cash. I'm going to loan you US dollars now, and you're going to give me a certificate and promise me you'll pay me back that money I loan you. You're going to do whatever you need to do with that money, but you promise you're going to give it back to me. And then in the meantime, you're going to give me a coupon percentage of that money that I loaned you. So it's a future promise of dollars. So if I don't want to have a long-term cash position, I only want it as an option on these markets because something's going to pull back. I don't care what it is. Something that I want is going to get real, real cheap. And it has been. We've seen it happening. We saw it happen in crypto. We scooped the dip. We saw it happen in, it's happening still in pot stocks. We saw it happen in tech stocks. We saw it happen in so many different things. And if you have to sell out of something else to buy into these, you're at a huge disadvantage. And that's why the cash position is an option on these markets, an option to buy whenever you want. And that's why I like to have a large cash position. But I'm not planning on maintaining a large cash position for 1 year or 3 years or 5 years or 10 years. Like I'm not hodling dollar bills, y'all. And I just wanted to clarify that because sometimes when I say I have a large cash position, I don't think people understand. I mean to deploy. Like I'm waiting for opportunities, waiting in the swamp, red eyes, lurking out of the water for that gazelle to get close so I can leap up and sink my gator teeth into it and drag it to the depths. That's what we do with our cash. We don't just hide it. You know what I'm saying? I'm not just dragging that gazelle down and just hiding him under the mud and I'm going to go eat his rotten, half-done carcass 2 years from now. No, that's not what I do with my dollars. I'm waiting to deploy them at every chance I get. So that's what the cash position is all about. So when I talk about that, I want to be crystal clear that under no circumstances do I want to be holding cash for elongated periods of time. No matter what the DXY chart looks like, I do not want to hold cash. Because while it's relatively gaining strength compared to the basket of currencies and other worldwide currencies not in this basket, this is literally just giving us a relative strength to the other currencies, not to the actual assets. Because all the assets we see going up, houses, meat, corn, coffee, lumber, gold, well, maybe not as much gold lately, but maybe soon, cryptos, stocks, all these things are going up relative to dollars and other currencies. So even though the dollar is gaining strength compared to the other currencies, that just tells me I want to have my money invested in the United States if the dollar is going to go into a parabolic uptrend because it's going to be going stronger compared to these other currencies. So that's giving me the worldwide view of where I want my money to be. But I still want to be putting my money into, assets and speculative plays. I don't want to just be holding cash, no matter what the DXY chart looks like. So again, just to clarify, I know most of you guys know that, but sometimes, it helps when I just blatantly state it and use like alligator and gazelle metaphors. I know that helps because you can picture the situation in your heads. So anyway, hopefully I painted you a picture of what I'm talking about. But here we have the Dxy monthly chart. And what we see here is on the monthly, we confirmed that 821 cross on the monthly. Okay, most of the time when we have done that, this was, over a 1 year period of bullishness. This time when we confirmed it right here, this was in June of 2014. It didn't top out. It didn't cross back over until July of 2017. This is a 3 year period. This is a 1 year period. This is a 6 month period. This is a 6 month period. That was just a little touch up here. This one right here is from 96 until it crosses back down in 2002. So we're talking about 6 year periods. So we're talking about long periods. So when this cross up right here, when we look at this monthly chart, we have one instance where it lasted for, 3 months, a couple months. So if we're just in the beginning of this cross up here, the likelihood of it playing out to where this move in the dollar, the strength in the dollar, plays out over a minimum 6 months, 10 months, 12 plus months, 3 years, 6 years, the likelihood of something like that playing out, and that's just based on the 821 crosses on the TJD Master. But then when we take into account, the big picture, and we look at the monthly 200 exponential and simple, we see that basically the dollar has been in a bear market crossed below the 200 exponential and simple in 2003. And we didn't confirm back above the 200 exponential till 2014. So it took 11 years to get back on top of the 200 exponential. It took longer than that, came down and retested it, and then retested the 200 simple. And then we finally flipped the 200 simple blue for the first time on this entire chart in 2020. So technically we went into a bear market on the dollar by how I determine it in 2003. So for 17 years, the dollar was in a bear market technically on the monthly chart compared to this other basket of currencies. And now we're entering a bull market. We just entered a bull market and people are saying the dollar is weak. It's trash. I don't want it. I'm investing in emerging markets. Are you sure? Are you fucking sure? Have you watched the news? Did you look at this chart? I mean, this is not financial advice. I'm not your financial advisor. You could do whatever you want, but I'm telling you what I'm doing, and what I see right here is safety. And where do I see that safety? I see it in the dollar, in the DXY, in comparison to other currencies in this basket. And, you could look at, Canadian dollar, you could look at euros, you could look at British pounds, you could look at, whatever other currency you want to look at, one that's not even in this basket. And it might paint a different picture, but overall, this gives us a broad picture of, the dollar's relative strength. And it's most important to look at the dollar because it's a world reserve currency in comparison to other currencies. So while some might look better than this compared to the dollar, some might look worse than this compared to the dollar. Like if we pull up the lira is getting absolutely destroyed right now compared to the dollar. If we pull up the Canadian dollar, it's slightly stronger than this chart is right here. But when we look at the basket, we get the broad picture. And here we have a hard buy signal coming out of the bearish control zone. We have an 821 cross. We have 200 exponential and simple both flipping over blue. We have the slope line on the histogram above the slope line. The slope line is flipped over blue. The slope line is above the zero line. We literally have everything on the DXY monthly chart. Every piece of every one of these indicators is screaming bullish. And on a monthly chart, we know what that means. We know exactly what that means. We know it's got a very high likelihood that this plays out over, here when we got that little false signal, we crossed over, never flipped the slope line over blue. And we were already inside the bullish control zone before we got that signal. Here, we flipped the slope line over blue. We know we're about to go into a long trending uptrend on this. We could easily have a pullback. We could see a temporary rejection. We could come back down and put in a higher low before we get continuation. But I'm telling you right now, what this chart is screaming is dollar strength in relation to other currencies. So that's what I'm paying attention to. I trust technical analysis. Can it be wrong sometimes? Yes. But is the probability when we trade with the trend extremely way, way, way higher than when we trade against the trend for long-term moves? It is 100%. We're trading with the trend. We're allowing the momentum of the markets and the market makers, the market movers, the smart money, the big money, the whales to make decisions for us. Because they're telling a story right here, and we're just reading it and then interpreting it. It's in a different language, so some people can't understand it. But we read it out loud to them, and we can help them understand. And that's what this is all about. It's about understanding what the chart's saying, what the whales are telling us. And they're telling us the DXY is strong. It's going into an uptrend. Now here on the daily, we see, basically getting a little 821 cross. We had a little one right here. We had a little one right here. We had a little one right here. But again, on the daily, 200 exponential and simple slope to the upside, we're seeing what looks like to me a bullish reset. Does that mean we can't come back down to like 94 and lose this key support? No, I wouldn't even be concerned at all if we did. As a matter of fact, I would really like to see this come back down to like 93.14, retest our breakout, retest this previous support, watch it hold, put in a higher low, and then we could catapult to the upside. Because when that doesn't break, that's basically saying, no, we're not ready for this. And then when it holds, if it holds, then everybody says, oh shit, might have been wrong about this DXY thing. Maybe we should get on board with this. And that's when we go to the upside. So it's that final retest. And then after you see that retest, if it does hold, that's when the market gains confidence. So we can pretty much skip over TLT since I basically just summed that up when we were looking at TNX. But essentially, we were trying to recapture the 200 exponential and simple. We are technically right now, we're watching our short and long duration bonds, treasuries basically, to see if we see any yield curve inversion, yield curve flattening, which we're already seeing. And then, eventually yield curve inversion as one of our predictors for potential bear market, or potential recession / depression. So we're seeing early warning signs of that happening. And again, you know, if this chart went back to the 1980s, we see bonds have been going parabolic since the 1980s. So, you know, even though we had a little dip right here, you know, are we buying the dip before we see continuation to the upside? Or, you know, are we just buying the lower high? So that's what I'm looking at. That's what I see when I look at these. So let's jump into look at the VIX. VIX is just getting absolutely wrecked. Coming back down to the bottom of the range. I do fully expect it to test our green line support at like about 15 down here. We're still in like the neutral zone, our descending dotted line, the heart line of our channel. We have our larger channel, the horizontal channel as well. So it looks like we're headed back down here to retest the lows. If we break down from here, I fully expect the next support to be around like that 1250 level. But as long as we're oscillating, as long as we're trading inside this range, as long as we're like in the neutral portion or like the central quadrant of this, that tells me that volatility is low. So what would we expect to happen? The lower this gets down here, the higher opportunity it looks like that we're going to have some kind of like extreme volatility in the stock market. The higher it gets up here, the more volatility is happening and the more likely we are to be finishing like that dump. You know, this is basically the capitulation from March. Where were we trading at leading up to that? Well, we were just down here at these no risk zones basically. And then all of a sudden we just go parabolic to the upside. This is when I want to be getting back into stocks. Down here in the green level, that's when I want to be getting out of stocks. So that's what we're paying attention to on the VIX. But again, still completely range bound. We had a little scare here for a minute or a little, you know, attempted breakout and just didn't happen. That's completely fine. So WTI crude. Just looking at our oil chart right here, found support on the 200 exponential and simple, back inside the bullish control zone on the daily, bunch of green histograms back above the zero line and slope line. Looks strong. I mean, we reclaimed a key resistance turn support, holding for now. You know, we have some key levels in mind. I might have deleted this chart. But yeah, overall, still looks good. Oh, you know what? I might have just pulled up a different chart. Well, it doesn't matter. I mean, we're basically holding this support right here. That's all that matters. We're holding the support. As long as we're holding this level, I fully expect oil to continue going higher. But we do have to be careful because we're seeing this getting real tired on the monthly. We're still inside the bullish control zone. But this is when we got bullish on oil, was on our cross back here when we exited the bearish control zone and we crossed the blue Stoch above the pink Stoch to the upside. We saw the knife come down here and basically go to negative 8.7, telling us we're at the bottom or the next drive is going to be the bottom. And then here we are at the top getting ready to cross back down, showing extreme weakness in the bullish control zone. So we see that knife was telling us the next drive down is going to be exhausted and that'll be our bottom. And then we get this massive sell-off right afterwards. And now here we are getting ready to cross back down. So this tells me that probably oil is getting ready to top out. Could it still run for months, weeks? You know, for sure. Definitely could, especially through like the winter time. But looks very toppy to me. Dow Jones. So again, let's look at our longer time frames because that's what we really want to pay attention to. We're basically up here at all-time highs. Let's look at our monthly chart. So just a quick little recap on our monthly. I've been trading inside this range since the 1800s. We operated inside of this channel. We went parabolic outside the channel and then parabolic to the downside. We had a 78.6% retracement from the bottom to the top. So let's not forget that in the Great Depression that the stock market lost, you know, 78.6% of the move leading up to it, which was the equivalence of from peak to trough, you know, 89% dump on the Dow Jones. So can crashes happen? Yes. Is it going to happen though? Very unlikely. But we're going to get ahead of it if we do see one happening. So then what happened after that? We consolidated in the lower portion of this range for literally, you know, the next what? The next like 55, 60 years, finally broke out to the upside above this heart line of the channel, made it to the top, and now we were able to put in our purple line resistance. And then again, we came back down, retested that resistance or heart line as support, came back up here, retested the purple line as resistance multiple times. And now here, where are we at right now? We broke out of the top of this purple line. So we're consolidating here. The longer we consolidate after a breakout, the more likely we are to move to the upside. Where was that upside likely to take us? Well, the only target we can have now with the blue sky breakout is a Fibonacci extension of these previous swings. So we have a Fibonacci extension in red from this high right here which was the peak of 2007, the mortgage crisis bubble burst, or global financial crisis, GFC, to the low right here. And then that's the red one. And then we do another fib basically from the top of our little CVD dump in 2020, February, down to our little bottom in March, basically. And that gives us our orange Fibonacci extension. And then we look at those levels and see, do we see something coinciding? Do we have potential targets to the upside based on those? And we can see our 1.618 in orange takes us up to 39,820 on the Dow Jones. Another, 10% to the upside. Okay, and then we see the 2.236 up here, but more importantly, we see the 2.618 in red up here at 51,141. And you're like, oh no, but we're going into depression, recession, everything's going to crash. We'll never go there. You're crazy. Okay, fine, sure. But let's just in case I'm right, and this just keeps melting up, it keeps going absolutely parabolic, just in case the same exact thing happens from, the 1920s, the full-on melt up, just in case that plays out, just in case it does the exact same thing 100 years later, let's have some targets just so we can keep our eye out for them. So that's what we have. We have some targets. Okay. So that's what I'm paying attention to. That's what I'm watching for. I got a pretty good reason to see that. A lot of other people are like, there's no way, it'll never do that. And I'm like, okay, can you tell me why? And they're like, because of overvalued and recession and the kind. Okay. So no. So the answer is no. You don't have any legitimate reasons why we can't easily go to $40,000 or $50,000. Then shush up. Shush your mouth. Okay, so let's keep going here. So now, what do we see going on the Dow Jones here? We see we're at extremely high levels on our monthly stochastics, and we see we're trying to find support currently, but we're potentially about to get this hard sell signal, the cross of the blue below the pink. And when that happens, that's not just a hard sell, just get out of here. Because we see that happen right here, where we cross down, cross back up, cross down, cross back up, cross down, cross back up, cross down, cross back up. But eventually, what happens? What's the final signal? We leave the bullish control zone. So we need a cross down, a hard sell signal, and the exit of the bullish control zone. The red highlight in the background goes away, and we see the hard sell signal. The red highlight goes away here, and we see the hard sell signal, but it's 2 months away from the hard sell signal. Here, we had a bunch of false alarms, but it weren't really false alarms because we never left the bullish control zone. That's why it's important to make sure you focus on both those things. Here, they both occurred at the exact same time. We left the bullish control zone, and we got the hard cross down. So here, we're still well inside the bullish control zone. We might get this hard cross, but we don't just immediately get bearish. What we do is we look for this cross down, and then we look for a similar rejection like this. Like we saw here, a rejected cross back to the upside, and then the exit of the bullish control zone. And often those two things will correspond with a bearish divergence on the time frame we're looking at. So if we see bearish divergence on the monthly, a rejection after the cross down here, an attempt to push back up that fails, that tells us, hang on a minute, that was probably a wrap. And what is that going to correspond with? Probably one of our fib targets getting hit in a parabolic move to the upside, a full-on melt-up rocket ship on the Dow Jones. Does it have to happen? No. Could it go to 8,000 tomorrow? Sure. Let's look at probabilities though. Probability right now is this thing is going to keep just melting up. And you know what's going to tell us it's not going to keep melting up? We exit the bullish control zone, get a hard sell signal, and print some divergence. So could I be wrong? Yep. Am I going to know exactly when I'm wrong and be able to look back at this video and say, oh, look, I knew I was wrong because exactly what I said would tell me that I was wrong happened. That's the most important thing. The most important thing is not being right and not being wrong. The most important thing is predefining how you're going to know when you're right, how you're going to know when you're wrong, what's your target to the upside if you're right, what's your target to upside if you're wrong, and what's the probability of success based on the predominant trend. And then also, and most importantly, how are you going to manage your risk? Is this a profitable trade to get into, to stay into? Should I just sell now and just sit on the sidelines for what could be a month, what could be 10 years? No, the last thing you ever want to be is one of those people that just sits on the sidelines for 10 years talking about the crash that's going to happen. I mean, the worst, I know this has happened to everybody at some point in time. You're watching some, CNBC anchor or Peter Schiff interview or something like that, and you're hearing them talking and they're saying the same thing. Robert Kiyosaki, stock market's going to crash. Everything's going to zero. The recession, the depression, everyone's going to lose everything. Pensions are gone. And then you like, all right, let me go switch off to something else. I'm tired of just hearing the same narrative over and over again. And then the date pops up and you're like, Robert Kiyosaki, like 2010. Wait a minute, this is a 12-year-old video. Oh, Peter Schiff, 2012. This is a 10-year-old video, and it sounds exactly like the same thing he's saying now. You really want to listen to that fucking dude? I mean, I love Peter Schiff. Don't get me wrong. Robert Kiyosaki, sure. Rich dad, great guy. Don't get me wrong. But don't get married to a fucking narrative, okay? I mean, you can do whatever you want, but hey, if you're going to marry something, marry a hot ass female or whatever's up your alley. Don't fucking marry some bullshit narrative that's going to cost you exponential gains because you just decided you made it up your mind on something. Have an invalidation target. You know what I mean? Where would you end your marriage? If you get married to someone, you love them and you care about them, maybe you'll forgive this, maybe you'll forgive that, but there's got to be a line in the sand. And when you cross that line in the sand, that's it. You're done. Okay? But you got to determine what's that line in the sand. Oh, if you cheat on me. Oh, if you cheat on me more than once. Oh, if you stab me. Oh, if you, abuse our kids. If you don't work. Whatever your line in the sand is, just define it. And then if you ever get there, you're like, well, I did say if she ever cheated on me, stabbed me, and beat up the kids, I was going to divorce her. So I guess that's it. Otherwise, you could slowly just get caught into this and you just keep getting pushed and pushed and pushed. And then eventually you realize you're so far from where you would have drawn that line to begin with. And that's my point with these charts, with these invalidation targets, with these stocks, with these cryptos, with whatever. Don't get married to an idea, okay? Don't get so stuck on the idea that you have to be right or whatever you believe is going to happen, because these markets can stay irrational much longer than we can stay liquid. Let's look at our weekly chart here real quick, and then we're going to keep on rolling. So we have a high right here. We have a lower high, a series of lower highs, really. A high, a low, a low. When we look at price action, that corresponds to a high right here, a higher high, and then actually a higher high right here, and potentially a fourth higher high, potentially giving us 4 drives of weekly bearish divergence on the Dow Jones. Does it have to play out? No. Maybe we come up, burst to the upside, and, invalidate this, and it just goes to new all-time highs and melts up. Definitely a possibility. Rocket ships to the moon. We hit the 40,000. We hit the 50,000. We're busting nuts all over the place. Crushing. Dow Jones, 50,000. Let's go. Okay, what else could happen though is that the bearish divergence plays out and this thing rolls over and it loses these key levels. So what are the key levels we're looking for? If this bearish divergence starts to play out, we're looking at this green support line at 34,793, which was resistance, support, and then also we're looking at that ascending line in red right here, which was our breakout from this ascending broadening wedge, this megaphone pattern that goes back to like that 2018, the little mini crash in 2018, the little CVD crash in 2020. So if we crash back down here and do the same thing again, which I'm sure when this crash happened, people were like, oh, we'll never go back down and revisit those lows again. And then who called it out exactly? Who nailed the exact bottom of the crash? Who knew it was happening beforehand based on technicals, not based on insider information or crystal balls? Your boy did. Okay, your boy. And you can go back and look if you don't believe me, because it's like one of the first videos I ever put out on this channel. The whole reason I started this channel was to warn people there's about to be a massive crash. And it happened. And then after that, we melt back up to the top and people say it'll never happen again. We can never crash, whatever. Well, you know what? We sure can. But we're going to see warning signs before it does. So we lost momentum. We're rolling over. We're putting in bearish divergence on the weekly. We could 100% melt up to the upside. We could 100% crash on down to the downside. But right now, momentum is in our favor. We're above the 200 exponentials. They're sloped to the upside. We're in a powerful uptrend. So for me, the likelihood is we keep doing what we're doing until something else changes. So that's our Dow Jones. We're going to keep it a little shorter on some of the other like stocks and stuff because I really want to rip through these assets today. So S&P, very similar chart, very similar things happening right now. Basically just coming up here, all-time highs. It's just a shorter version of the same chart, basically doing the same thing. Multiple drives of bearish divergence. Losing the slope line, still inside the bullish control zone, looking like it potentially could roll over. When we switch out to our longer time frames though, when we look at this monthly chart, we see the same thing keeps happening on the S&P. We go in a parabolic uptrend. This is basically the early 90s. This is our dot-com bubble burst, have a massive pullback. This is our double top in 2008. So it's important to notice that because of the composition of the S&P, that this actually double topped. It didn't put in a new high. So this was our capitulation move in, .com bubble burst. This was the GFC, and then we actually put in a low and then a lower low, double topped, and then finally went above it. So if you got stuck in the S&P from 2000, you were upside down on your position, finally got back even in 2013. So if you were able to stomach the 61.8% retracement from peak to trough, were you able to stomach the 13 years going sideways in the market? Or could you have literally bought, a house or, anything, gold, something else that would have outperformed zero for 13 years? Pretty sure we could have. And that's what we're doing. We're trying to dodge these type of moves. We're trying to dodge the time capitulation. We're trying to dodge those price capitulations. But we see very clearly we had tested the 0.5 Fibonacci retracement, double topped. Then we tested the 618 Fibonacci retracement. Since then, we basically did the same thing again. We went in a parabolic uptrend. Maybe we did. I might have accidentally moved this. Everything is ruined. I probably just misclicked on that. My bad. But yeah, we see basically that's our bottom. This was our CVD retest of the bottom. Here we're just creeping along this top, this resistance. We obviously touch it right here. We touch it again right here, month after month after month. And now here we are at that same level again, just beating our head on the top of it. So sure, we could break out to the upside, go absolutely parabolic, get a measure move to the upside of the channel. S&P goes to some ridiculous number. Let's not get too crazy though. Remember your boy was calling for, 4,800 S&P. I mean, all right, technically I missed it. I think, what did we get to? 47, 49. So I was off. Barely. But anyway, let's just pay attention and let this thing tell us what it's getting ready to do. Because we're seeing that same signature again. We're seeing the potential cross still well inside the bullish control zone. But, we're at a key pivot in the market for these things. If it's going to go up here, we're going to participate. If it goes down here, we can get the fuck out of the way. Timber. All right, so NASDAQ. Looks okay. Did not put in a new high off that other move. Sort of invalidated this potential head and shoulders that we were looking at. Is it possible we still have some sort of like head and shoulder-esque situation play out? I mean, I don't like it. When there's not a bunch of symmetry, it looks less likely to happen to me. It is possible still. We come down here, break down from this level, retest the neckline, come back up, see where it's definitely possible. But more than likely at this point in time, the longer this goes sideways and holds this level, the less likely this looks that we'll see a situation like this play out. So that's why we don't get married to these ideas. We just draw potential, plays on there, and then we can see what happens, how they develop. And again, we can see like what our invalidation point will be. Here again on the weekly, we don't see the same drives of divergence in the same way, but we see a very high peak up here. We see a series of lower peaks, and then finally a third or fourth final lower peak. And again, those correspond with high on price action, and then a higher high on price action, an even higher high on price action, and then potentially we'll have to see with this one. Does it push up again? Is it just 3 drives of bearish divergence? Do we get a 4th drive and a new high? Do we invalidate it? Who knows? But right now we have 3 weekly bearish drives of bearish divergence on our indicator oscillators on, pretty much all the major indices. So definitely worth paying attention to. The monthly actually looks a little different on this because it consolidated for so long. But again, we see the potential across the downside. We are still very much still inside of the bullish control zone. So the bulls are very much in charge. We do see our second red histogram has printed though. So when this opens up tomorrow, we'll have printed, 2 red histograms. You guys know for me, the bottoming on the histogram or the topping on the histogram is 2. When we see 2 red histograms, that tells me, we're in the danger zone, or I'm looking to potentially get out of the way or de-risk. When I see 2 green histograms coming out of a bear trend, that's how I essentially like use that as an entry. Obviously, I do it on shorter time frames though. But definitely looking sketchy on these main indexes or indices, depending how you Russell trading inside the range forever, failed breakout to the upside, basically found support over and over again on this channel. Now we're putting in some kind of W pattern, but we have to look here because the 200 simple has rolled over, has negative slope. 200 exponential, we're still holding on to it. Heartline channel, we're still holding on to it. We're seeing some very clear rejections these last couple days, trying to break out to the upside. We're basically at resistance right here. very much could cross this to the upside and start building momentum, likely get the measure move of this W bottom, takes us back up to the resistance, and then we can see what happens there. But this thing has looked weak for so long. And when is the last time we saw the Russell flipping the 200 exponential or simple bearish? Well, we flipped on bearish back here in February of 2020 before it got absolutely wrecked. We flipped on bullish, right here in October of 2020 before it went on this parabolic bull run. And now what's it done? It's just consolidated forever sideways. Told us we don't want to have our money right here because this is time capitulation, nothing happening while the rest of the market's going absolutely parabolic. And now what are we seeing here? Extreme weakness. Extreme weakness. Does it mean it's over for the Russell and there's no way these, small caps can just burst to the upside and go parabolic? No, it does not mean that at all. But what it tells me is that there's no momentum and we're basically about to lose key support levels. So if these both flip over red and we break down from here, well, that's bear market. That's bear market territory. Not even look at the longer time frames on the Russell. So let's go through our sectors real quick and just kind of take a look and see what looks good, what looks bad. But essentially our same narrative is still playing out. So XLE been bouncing the 200 exponential and simple repeatedly. 200 simple is above the 200 exponential. Still have positive slope on both of them. We have a negative slope on our TJD TDMACD. Bunch of green histograms, hard buy signal from the neutral zone. We have technically tried to cross the 821 back to the upside, tried to cross it back to the upside, and it looks like we're getting rejection. So to me, what does this look like? It looks like we're putting in a descending, broadening wedge right now. So what I'm paying attention to is these key levels down here and then key resistances, something like this. If we can't break through our resistances to the upside, we probably just continue to fill out this pattern. So if we're at the top of the range right now, more than likely we'll head back down to the bottom of the range. So depending when we get there, we have obviously 200 exponential and simple acting as potential support, but it would not be unrealistic to think that this thing rolls over, bounces a 200 exponential and simple, comes back up, puts in another low high, and then sometime in the near future, we end up back down here retesting some of these key resistances. Whether it's this 382 from like the macro Fibonacci, and we get there a little quicker, whether it's all the way down at this key support in orange right here, we'll have to wait and see. But overall, this looks weak to me. XLE looks weak, energy. Keep in mind, one of the few sectors that's not putting in an all-time high after this parabolic bull market. And that tells us maybe something's going on with oil. Maybe something's going on with some of these other, electric plays here. So XLI, industrial sector, range bound inside of this horizontal channel, basically. We're at the top of the range right now. Could we be putting in a double bottom? Potentially. And we break out to the upside, get a measure move. But we are also at the area of resistance where we would expect this to potentially top. So for me right now, we're at resistance. So if we break through resistance and consolidate, I think we move to the upside. But more likely than not, we got rejected here once, twice, three, 4 times basically with this failed breakout, 5 times with this little nubber. And what's the likelihood now? We just get rejected another time. The same way that support has acted 1 time, 2 times, 3, 4, 5, 6, 7 times. I would expect the same thing to happen. We just keep consolidating, oscillating within this range. So XLI, looks like basically just looks like a time capitulation taking place, boring people to death and doing nothing. XLB, materials. We cleared that resistance right here. That's good. Basically consolidating above that level. If this holds, I think we continue to the upside. And we finish playing out our measure move of the triangle, which takes us up to that target at 93, 94. Does not have to happen though. This thing has been, it's been trying. It retested the breakout of our bearish triangle, the descending triangle, retested it, found support, retested again, higher low. So as long as this green ascending support line holds, as long as this red line holds up here, we play out the measure move and then we reevaluate. So I'm going to take a quick sip. It's bad when the bots show up and outnumber the people in the comment section. What's up, CW? Good to see you, brother. Excited for that 2022. Let's go, baby. Hey, if you're out there listening, now's your chance. Chime in the chat. Say what's up. Happy New Year. Maybe you can't think of anything. Emojis are okay. I always appreciate the interaction. Comments. Let me know where you're at. Let me know what you're bullish on. Let me know what assets you want to see. Let me know what your favorite emoji is. Let me know if you were all in on Squid Token when it collapsed. XLF. So let's see. Bouncing 200 exponential and simple. Building up a little bit of momentum here. Sort of. I mean, we're finding support at this key level. I still think we push up to 1.618. Still have the target up here at like 4110. So XLY, consumer discretionary. We basically descending, broadening wedge, broke out to the upside, crossed 821 back to the upside, building up a little bit of momentum on the histograms, back inside the bullish control zone. Looks like it's starting to roll over. If this holds support long enough, I think we retest the highs and come back up to 212. If we break through there, we can reevaluate. If we don't hold and it starts to roll over, we have basically a cluster of confluencing support. The green line, the red line, the other red line. So more likely than not, we hit this level at like 195 if we start to sell off, and then we see some kind of reaction rally off that, which potentially will line up with 200 exponential and simple by the time we get there. XLP breaking out, new highs, consumer staples, obviously something I'm expecting to stay strong, as these are the type of things people can't go without. So the prices can go up, the earnings can go up, and people are still going to pay it because they need these things. So still looks very strong. Best sector we looked at so far. XLV healthcare, another one, big strength play. Measure move has almost played out. Basically fell just slightly short right here. Bullish control zone, bunch of momentum. 8 and 21 cross to the upside. Looks strong. I mean, these are the places to be, though. I talk about it every stream. Utilities, same exact thing. Breaking out to the upside. Literally the same thing. So, you guys know consumer discretionary, utilities, and healthcare, and then obviously we've talked about real estate a little bit. We'll get there as well. XLK, and real estate's lagging too, so even if it doesn't do well long term the same way that these other sectors will, we would expect at least short term for it to like show less volatility or hold on longer. So we'll see, especially if we see like the inflation and the rent rises and the property rises. It takes a lot longer for those things to play out if we do go into like prolonged bear market, recession, depression, etc. XLK tech up here at new highs. Looks pretty juicy. Obviously I have a very key support here in green, a very clear ascending resistance in red. So, I expect it to continue oscillating inside that range. So, if we're getting rejected here, it rolls over. I think we come back down, retest support. Eventually one of these is going to break, and then we can basically trade it accordingly. I do not like, daily triple bearish divergence on the daily here. Looks like we're invalidating on the stochastics, but we still have it on TDMACD. So it's worth paying attention to. This looks like a rejection off of resistance, off of the slope line, and basically off of like the bullish control zone. So tech not looking so juicy, but still looks good, considering all-time highs. XLC communication looks very weak. Broke down from key levels, retested, just like we said, the 200 simple. That's our reversion to the mean. Now here we are back down to 200 exponential. This looks weak. We have momentum in our favor. We're in the bullish control zone. This looks like a hard rejection. We have technically, we're so close to going into a bear market on this. I mean, the 200 simple looks like it's about to roll over. If we break down from the 200 exponential, it's going to flip straight back to red, and this thing's going to go into a bear market. And it flipped into a bull market back in April 2020, and, went absolutely parabolic since then. Since we confirmed the bull market, it went from bull market confirmation to the top 70% communication. So, if this is about to potentially flip into a bear market, I mean, do we just want to sit along the sidelines and wait? Or do we want to get the F out of the way? XLRE, again, just burst into the upside. Still looks thick and juicy. We've got this active trade set up with our next target up here at 54.51 and then the 1.618 Fibonacci extension at 58.07. Again, depending what happens into the future, this could easily change, but we're very clearly in a bull market, putting in all-time highs. No reason to get bearish on this right now. You can make up a million fundamental reasons, or we can throw around narratives all we want, but the fact of the matter is we'll go with technicals until we see something different. And, you know, I can give you a bunch of good narratives why, even if real estate is going to get wrecked and we're going to crash and we're going to have another housing crisis and a mortgage crisis and government's going to do this, that, and the other. Sure. I bet we see it on the charts before it happens. XTN. So transportation, you know, potentially looking like we're about to get that breakout to the upside. So we'll see what happens here. Back above the key support in blue right here. Looks like we got that W double bottom consolidating. I expect this to burst back up to retest that high again. And that's just the measure move of the W off the 200 exponential and simple. So looks pretty good. Starting to build some momentum. Looks like we're going to try to test this slope line. Bullish control zone. Looks like it wants to push up right here. It's not going to be smooth sailing, but looks like it wants to go. Hail coming down on this little like descending triangle wedge deal. Basically had the breakout, failed to put in a higher high, pressed that previous high. So now we have two higher high resistances. So we're basically just putting in a series of lower highs and lower lows. So we have obviously a high, a lower high, a lower high. We have a low. And then after we put in that lower high, another lower low. And then after we put in the next lower high, another lower low. So this is very much in a downtrend. So until we invalidate this C orange line right here, which we obviously came up and retested and it failed, you know, like we were expecting, I think it's more likely than not we head down here to our green box at like $50 and we retest that one. So very clearly in a downtrend, we had an underperforming breakout to the upside, and now we see the 200 exponential and simple in the other order have both flipped over pink and red respectively. This is officially in a bear market. Hail is in a bear market. So what does that tell us? It tells us that, you know, transportation sector is seeing some serious weakness. You know, different parts of that sector anyway. Even though the whole sector itself is still hanging on for now, we see, you know, hail, and then now we're looking at jets showing some serious weakness. So jets has broken down from that key support, that ascending green line right here. You know, this topped out back in like 2014. So airline industry, pathetic. Recent price action, even more pathetic. And again, 200 exponential and simple rolling over to the downside, starting to build up some short-term momentum, trying to put in a short-term double bottom. Maybe we just come back up here, retest the 236, 200 exponential and simple at like $23, but looks like trash. Bear market. Looks like straight up trash. UPS retesting those key levels. You know, 217. There was an announcement that the United States Postal Service and FedEx will both be raising their prices like 8 to 12%. UPS has not made a similar announcement. So, you know, will they not make as much money because they didn't raise their prices? Will them not raising their prices drive excess demand their way because they kept their prices the same? I mean, we'll have to wait and see. We'll have to see how it all plays out. But overall, as far as I'm concerned, this thing trades very technically. It's been filling gaps. It's been bouncing moving averages. It's been trading inside a range. So here we are once again at resistance. I expect resistance to hold. Longer time frame, I think this probably is going to get hurt. So we'll wait and see. FedEx, finally seeing that second part of our measure move play out. Coming back up here to retest the 200 simple, very clearly in a bear market, trying to save the 200 exponential as we speak. But this again just looks like a reversion to the mean to me. We had the initial gap fill, we had the completion of the reversion to a 200 exponential, and now it looks like we're going to push back up to 200 simple. But let's keep in mind, I don't like this chart. I think it looks like trash. So every time we saw similar situation happen, you know, we had a massive dump and came down and retested the bottom of the range. So I don't know what's going to happen with FedEx, but you're probably going to be reading something or hearing something on the news, and then you'll be like, oh man, the stock price is crashing because X event just happened. Well, the technicals, the chart right now is telling us there's about to be some X event that the narrative is going to say was the cause for it, but really it was just the technicals. PAVE, our little infrastructure ETF deal, retesting the highs. Looks like, again, it's trying to put in that little like W double bottom. We're seeing the slope line roll over. Still has momentum in its favor. Bullish control zone. Looks okay, but at resistance. So maybe it gets a measure move to the upside. Maybe it gets rejected right here. We really don't have a bias one way or the other. I mean, clearly in an uptrend, but losing strength. 200 simple is above the 200 exponential now. So, you know, is it getting close to topping out? Probably. Is it going to top out right now? I mean, most likely not. It's very hard to call the top on things because they can go up for days, months, years, and you're trying to pick the exact day, the exact move where it tops out. I mean, you're way better off just picking the day it doesn't top out. If something's going to go up for 365 days in a bull trend, and you say, okay, I'm going to pick the top on this. I'm like, okay, you're going to pick the 1 day or the 1 week or the 1 month out of the year when it tops out? Yep. Okay, sure. I'll take the other end of that bet all day. Because if you pick the day it's going to top out, you can be wrong the other 364 days. If you pick the week it's going to top out, you can be wrong the other 51 weeks. You know, if you pick the month it's going to top out, you got a 1 in 12 chance. So I like those odds. That's why we try not to pick tops and bottoms. We play reversion to the mean for short-term scalps, but we trade with the momentum because it gives us a higher probability of success. You know, if we're in an uptrend, we're going to probably stay in that uptrend until the one time we reverse. If we're in a downtrend, we're going to stay in that downtrend until the one time we reverse. Let's rip into our technology stocks, the we don't make any money stocks. So Lyft, bear market. Below 200 exponential and simple, building up some momentum, crossing 821 to the upside. Looks like it wants to push up here to like $48 to $52. It wants to. I don't know if it's going to get there. You know, we'll see what's going to happen here real soon. Uber trading inside this very clear range. Push back up here, getting rejected again off 200 exponential and simple. Very much in a bear market. Looks very toppy here. And, you know, our trade played out perfectly. 25% to the upside. Looks like we're coming back down here to sweep the lows. Very clearly been putting in lower highs and lower lows. I suspect we continue to do the same. So get ready for a new low on Uber. Discovery. So we got this little trade set up in play. That red candle didn't look so juicy after that last one, but 20% move to the upside, retest this previous top and the 200 exponential. Probably the 200 simple the way this thing's coming down here. Building momentum though, slope line flipping blue, headed to the upside on the stochastics. We'll see what happens. I mean, it's a nice risk reward ratio, 3.37 to 1. You know, this thing's been getting absolutely beat down and hammered, but what is the fair value on this? I mean, really don't know. I mean, we're back at, you know, this was a key support back in 2016. So, you know, we traded below that for a while. It acted as resistance. It acted as support when we came down to it. That's where we're at right now. So, you know, I like the odds right here. Does it probably continue lower on longer time frames? It probably does. But do we get a little quick 20% out of it first? Yeah, I think we do. But, I mean, I'm not betting the farm on it. Viacom, again, just been getting absolutely wrecked. We don't really know the fair value of this because it ran up so high on, you know, massively leveraged Archegos bullshit. So, but bear market looks like it wants to cross 821 back to the upside. We'll see what happens. I really got to see a confirmation on this, and then potentially I would take an entry because it's just been getting wrecked so hard. Arguably, there's something there. 20% move to the upside for the reversion of the mean, and you know what? Take an entry off that. If we take out the lows, you know what? 5-6% stop loss. So, is there a trade set up there? You know, off this level? I mean, arguably, I would rather see it build up some kind of momentum, but I mean, the truth is, you know, if you're just taking these things on probability of success and risk reward ratio, you're looking at 26% move to the upside with the target of $38. You're looking at entry price of $30 where we're at right now, $30.18. You're looking at a stop loss below the previous low of this cycle at $28.41. Our stop loss is 6%. Our target to the upside is 26%. Our risk reward ratio is 4.45. So we flip the coin. If we're right, we get $4.45. If we're wrong, we owe $1 to the Discovery Fund. I'm sorry, the Viacom Fund. So, you know, bear market though. This is a reversion of the mean trade. This is a scalp. This is a quick trade. We're expecting to get in, get off, get out. Okay. But keep in mind though, when you go for those quickies, when you take that danger, you take that risk, sometimes you're going to end up with some burning feelings and you may need to go see the doctor. So, careful where you start, you know, just sticking your money. And that was not a metaphor. I'm talking about investing right now, not women. Okay? Pinterest. So, yeah, we're at support down here. It's trying to build up a little bit of momentum. The histograms are above the slope. Still red technically. Got the hard buy coming out of the bearish control zone. Looking like a little double bottom. We see some bullish divergence between a couple of these points. You know, we basically have some bullish divergence playing out between these last three. I mean, but at the same time, you know, yeah, we could take another stab at this. We'll see. it's really got to show me something. I mean, it's same trade, and there's probably other stocks that we could get a better risk reward on. Snapchat still have this active trade set up in play for now. 25% target to the upside, 6.8% to the downside. Triple bullish divergence. 1 drive, 2 drives, 3 drives. 1 drive higher, low right here. Higher, low right here. 3 drives of bullish divergence. And then we see the same thing playing out. 1, 2, 3 drives of bullish divergence. Hard buy signal. Potentially going to try to cross the 821 back to the upside. Target to the upside, 58.49 on this. Entry price, we're at it right now, $47. Stop loss if we take out the swing low right here, $44. Maybe we put another drive of divergence. Maybe it goes to 0. Who knows? But you know what? 25% upside potential, 6.8% downside potential. We're talking about a 3.67 risk reward ratio. So we flip the coin. We get 367 if we win. We lose $1 if we don't. Not bad. I like those odds. We don't flip those coins and get 1-to-1. That's garbage. I don't even like that 2-to-1. I mean, I'll take it. I'll take it if I'm desperate. But we want those 3s, those 5s, those 10s. Okay? Asymmetric gains. We want those big, thick profits in 22. Okay? We're done with that petty shit. I don't want people taking 1-to-1 risk-reward ratio trades. You know what? This year, we might not even look at 2-to-1s. We might not even fuck with 2-to-1s. Might only take 3 and ups this year. We'll see, though. Peloton. I mean, looks like trash. Still just getting absolutely wrecked. Left this massive gap behind. I mean, shit. I mean, at this point in time, what? You're getting Pelotons at Goodwill for like $30? What is going on with this thing? Are they out of business? Did they go out of business? I might buy Peloton. I mean, what's their market cap at this point in time? Are they worth anything? Wow, I feel sorry for all the idiot retard people that didn't listen to me on this one. Not that I'm giving you financial advice, but I mean, it was at 112 when we confirmed it to the bear market, and people were excited about Peloton while there was a giant descending triangle playing out right here, and the measure move literally got hit. I mean, it got hit with a baseball bat. I mean, it's technically the measure move is probably 0 on this, but only because we're on like log scale, so it's a little ridiculous. But I mean, come on, Peloton. Hey, if you're gonna find support, this is your chance right here. So we'll see. This thing has got to really carve out a base before I would even think about touching it. I mean, plus, let's be real. I mean, it's Norditrack. Airbnb. It's trying to hang on, putting in a series of higher lows, but lower highs, consolidating at or around the 200 exponential and simple. We're basically in the neutral zone. Yeah, I mean, we already had some trade setups play out on this. Hit our target back to the downside, had a nice little pop back up. I'm not touching this right now. I'm neutral. Zillow. So kind of front ran our target right here, missed out on a little opportunity. There's definitely a smaller opportunity, 37% move to the upside from where we're at now. If we break through this little ascending triangle, come back up here, fill the gap. So entry price, right where we're at, $64, let's say. Target to the upside is 80, let's say 86, right around there. 37% move to the upside. Target for a stop loss, 6.5%. If we take out the recent swing low right here, and that stop loss would be at $58.29 for a risk reward ratio of 5.76 to 1. We see building up momentum, blue slope line, histogram above the 0 line. That's good. 821 crossing back to the upside. Very clearly still in a bear market. This is our reversion to the mean scalp. We're literally saying this thing is in a bear market, but it's undervalued. So we're expecting it to come back to fair value, at which point in time it will most likely get rejected, and then it will go back down and keep going lower. But right now, it's sold off violently to the downside and probably is undervalued, at least temporarily. And then we can come back up here and see what happens over time. But more likely than not, Zillow is going to fill this gap, get the reversion to the mean, and put a nice little trade setup in play. So 5.76 to 1 risk reward ratio. So we're seeing some definite opportunities in a lot of these things that are decent companies that have potential in the future, not to just go away. So why take little petty 2-to-1 risk reward trades, maybe 3-to-1 risk reward trades when we're seeing 5, 6, 7, 10 to 1 risk reward trades all over the place. We're not doing that. No, thank you. Wish. So we have a couple of trade setups in play here on Wish. We'll see how this plays out. And this thing's just been getting straight up hammered. Again, triple bullish divergence, trying to carve out a bottom right here. It's really got to cross this 821 back to the upside. First target is that resistance level, 46%. Next one after that is our fib level, 236. Assuming, that basically we have bottom, which we probably, let's be real here. We probably didn't. This thing probably just goes a little closer to zero. Eventually it just goes all the way to zero, but we'll wait and see. But our second target would be like 62 at that 236 at like 525 roughly. And then the third target's the 382, the reversion to the mean, 200 exponential and simple, assuming they just continue to kind of just push down here. We're talking about 750. But again, we got a tight stop loss on this, 10%. If we get stopped out down here below like 289, we're out 10%. But our target to the upside on our first setup is 473, 46%. Our second setup is 62.66% at 524. And then our third target for the reversion of the mean scalp is 128.8%, $7.34. And we're talking about risk reward ratios that will blow your freaking mind. 12.5 to 1 risk reward ratio, 6 to 1 risk reward ratio, and 5 to 1 risk reward ratio. So, or it goes to zero. So again, not looking to bet the bank on this thing. I'm not looking to go all in on Wish. I'm not trying to make a wish on their foundation or anything. And this is not the same company. I'm just being a wise guy. But basically just getting wrecked inside this channel for a long period of time. We'll see what happens over time. But in all actuality, we're at the heart line. If we burst through the heart line, we're probably going to retest the top of the channel, which also just happens to be that horizontal resistance. Maybe we slightly overshoot it, hit the 236. If we break out of it, we likely get the move to the 382, which is basically the measured move of the channel if we get the break. But again, we probably just get smacked back down and get wrecked. So that's why we're not investing in Wish. We're scalping it. We're pulling out our tomahawk. We're catching it when it's running away. Running for dear life. We're going to jump off our horse. We're going to wrestle Wish to the ground. We're going to grab it by its hair, and we're going to scalp this piece of shit. Okay? And then we're going to leave. We're going to get what we came for, and we're going to leave. We're not going to marry it. We're not going to fall in love with it. We're not going to hodl it. Nope. We're going to scalp this little bitch, and then we're going to look for somebody else to scalp. Bumble. Potentially trying to bottom out right here, moving back above the slope line. Hard sell signal, it could go either way. Holding on to this ascending green line support for now. Did leave a big, thick, and juicy gap back here. Again, there's so many opportunities if this market wants to pop up. If it wants to shoot this reversion to the mean trade, it's there. 45% upside, 8% stop loss if we take out that previous swing low or all-time low on this piece of trash. Entry price, basically where we're at. It really should have been like 32.50, but 33.86 will work too. 45% upside, reversion of the mean, gap fill. 8% downside, 5.6 to 1 risk reward ratio. Stop loss below, basically like 29.80. Target to the upside, 47.33. Again, pick your poison, but these risk reward ratios, 5.6 to 1. Opportunities here. We take. How many of these do we just look at? That's 4, 5, 6, 10 to 1. We can take a bunch of them with smaller position sizes. And then if one of them pops off, it pays for the other ones. If 2 of them pop off, we're in profit. If 3 of them pop off, we're in big profit. If all of them pop off, we're retired. Not literally, but you know what I mean. We're at least buying a bottle of champagne and a nice cigar. Maybe some Chianti. Alibaba. So we saw actually in a pretty aggressive move off of the 618 on Alibaba. So are we trying to carve out a bottom right here? Was that just like end of year China pump? Probably. I don't know. I didn't get excited about this. I know people are getting excited about this move right here. Not the 3.4% to the downside, but like everybody was like, the bottom's in. China's going to the moon. It's up 10% in a single day. Oh my God. But when you like zoom out and look at what China looks like right now, look at the size of the dump and the length of the dump and the massive bear market that it's in and the descending triangle and the 200 exponential and simple moving average just getting absolutely wrecked. And then you zoom way in right here And then you're like, this is what you were getting excited about? This right here? That's the thing? Are you are you sure? Are you fucking serious, bruh? We're we're still down 61% off the highs, and this is what we're getting excited about. I think I'm gonna hold off on this one before I jump back into the China stocks. But again, we do have a gap up here at like 160, so maybe we get a nice, aggressive, powerful move to the upside. Could get like a little 50% pop, fizz, a little bit of that Alka-Seltzer, 36%. But I'm gonna tell you right now, hey, before you take that Alka-Seltzer, you're gonna have to get some heartburn. So is the burn over yet? I don't know. Sure looks like catching a falling knife to me. So no thanks, China. Baidu, same exact thing. Not quite as technical off like the 618, but just getting absolutely wrecked. Probably does come back up here and retest the breakdown in green and the 200 exponential moving average about $1.66. Risk reward's not there on this one the same way as Alibaba though. And I'm not taking Alibaba, so what does that tell you? TME, 10 cent, just reclaiming that support line. Still looks like trash. BZ, just back, still cannot do anything. I mean, it's been trading inside this range forever. We had a breakdown, we had a break up, and then still couldn't do anything above the resistance. Back down below the blue support. So just acting as resistance again. I mean, this probably just goes much lower. JD had a nice little pop up. Basically hit our measure move to the downside. This thing's trading very technically. Maybe does see a little continuation. Hard buy. 2 green histograms above the 8. So next target to the upside, probably 73. After that, reversion to the mean, 76.42. It's not even a 10% move, and there's so much risk. There's just no way that that's worth it. I mean, what are we looking at? Like 10% move to the upside, and then where would we set our stop if we took out that swing low right there? 6.84. So we're looking at basically like a 1.5 risk reward ratio. No thanks. And on top of that, you got to bet on China? No thanks. Neo, again, had a nice little pop up right here, reclaiming that support level. I mean, it's doing, like, how long ago did we draw this chart? And it's literally doing exactly what we said. The 5 wave down. So we hit the bottom here, finding support. You know, maybe it's not going to touch exactly right here where I put it. Maybe it's, you know, maybe it happens over here. Maybe it happens sooner. Maybe it goes sideways for a little while and touches it. Maybe it comes back down here and then comes back up. But I mean, it's trading very, very technically. So 36 bucks is our target for the 4 up here, and then we expect it to just put in another lower low. Could it break out right here and then get the measure move back up and retest it too? It definitely could, but I'm gonna wait till that happens. I'm not ready to just like get juicy on this right now, but we do expect eventually a macro 4 to play out somewhere down here in, like, I mean, it sounds crazy, but in like the single digits, and then after that this thing could go like absolutely parabolic long term, but not anytime soon, in my opinion. Nvidia, as long as we're hanging on to 291, still looks okay. Holding that yellow support right here. If we break down from that, though, probably is coming back down to retest that previous support back here, the 200 exponential and simple. You know, obviously these things have been overperforming. Not unrealistic to think that people are taking profits in things like Nvidia and AMD. I would say Intel, but I don't think anyone's made any profits on Intel in about 20 years. So AMD looking very, very similar. Again, if we break down from this key level at like 133, we start retesting like 118 or 100, well above 200 exponential and simple. These things have been outperformers all through last year or so. Don't want to get too cocky on them, but definitely looking for semiconductors, as if they do start looking like they're going to top out, it probably is going to give us an idea as to, you know, potential slowing of the world economy or, you know, topping of these markets. So Intel, straight up trash. Probably goes much lower. TSM, Taiwan Semiconductor, still just range bound. Again, perfect trade setup, played out, came back up, retested resistance, failed to break above it. Probably eventually comes back down here to support. It is currently holding the 200 exponential and simple. But you know what? I mean, it's just going to keep oscillating in this range. The same thing that it's been doing since December of 2020. Nothing makes me think it's going to change. SMH just looks like Nvidia and AMD. So again, I'd rather just pick the 2 winners than try to just dabble in the sector. But you know, sometimes it's nice to have that exposure. But I just don't think all of a sudden we're going to see, you know, some crazy new semiconductor, you know, situation where one of these things pops off and it's like, oh man, I can't believe I didn't buy that one. It's like, well, it's probably going to be Nvidia and AMD. But if you want a little more exposure to, you know, like third, fourth, fifth place, that's fine. Nothing wrong with that. ARKK. So I mean, just after a year of getting wrecked and ending up in a bear market, and like Kathy, like pulling the exit scam, leaving New York, going down to Florida. I mean, look, if there ever was a trader of a human being, it's Kathy, right? She was all about the electric. She was all about the liberals. She was all about saving the world. And now she's like just taking her cut of the billions, moving down to Florida, running away from the taxes, getting a little bit of that sun. I wouldn't be surprised if Kathy doesn't even do her weekly, monthly updates anymore, and she just sits around, keeps taking her management fee as long as she can, and then she just fucking fades into the distance, retires. Matter of fact, I don't even think anybody's going to be saying her name in 2 years, 3 years, 5 years. 5 years from now, somebody's going to be like, ARK went down 96%. I thought she had a 5-year time horizon. And she's like, oh, 5 years, yeah. From now. I meant from now. I meant 5 years from today. You thought I meant 5 years from 5 years ago. No. Because that's what she always says. Oh, I have a 5-year time horizon. I'm like, bitch, it's been 2 years. Like, why isn't it a 3-year time horizon? She's like, well, I trade every day. So that's exactly why. It resets every time I make a trade, which I do every day. Sure, Kathy. Good job. But you can't blame her. She's taking a little cut off them billions and billions. Teledoc getting wrecked at support right now. I mean, I'm not trying to dabble with this. There's possible it gets like nice little push up here, 28%. I mean, 112 would be the target. 80, like 86 is the stop. 3-to-1 risk reward ratio. Could go. We'll see. I mean, there's some of these ones though I just really don't want to touch. Lemonade. Okay, I'll actually do some TA on this since it was a request. So we haven't looked at this one for a while. Oh my gosh, man. I remember that lower high back here before the dump, and then the breakdown from here, and the retest, and then the support, the retest again, and then once again the breakdown, and then this was our retest, and that was the last time we looked at this chart. Was at $80. It's down another 50%. Confirmed the bear market right afterwards, retested the 200 exponential, retested the descending trend line. And look at that. It's gone straight down to a new all-time low. So are we, and again, I'm not trying to be a dick. I understand you may own or have a position in Lemonade currently, or looking to, you know, buy the, I mean, I don't even want to say a dip at this point in time, buy the blood in the streets on this thing. But let's just keep in mind that everybody that ever tried to catch the falling knife on this thing so far is underwater. Everyone that has ever bought this thing ever, except for 30 minutes out of one day right here and 2 days right here, you could have bought it and you'd not be upside down. So literally everybody, it's you versus the whole world if you buy into this thing. 77.5% down from its highs. So everybody that's ever bought this is just getting wrecked right now. Some people more than others. Everybody that's bought this is a loser. So it's you versus all the losers. It's a lot of losers. So, I mean, do I want to be involved in this with all this selling pressure above my head? Every time this moves up a little bit, oh, thank God I can get out even. 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 I mean, no thank you. This could take forever to recover. Maybe it never does. No thank you. I mean, you can say the same thing about Wish though. You know what I mean? It's just pick your poison. Those are the riskiest, worst trades you could possibly take. The worst scalps. The worst knife catches. But you know, they pay off big sometimes. But it's a steady, slow, painful grind. And that's assuming you even pick the bottom. Palantir, retesting support down here. I think we're going to get back down to the 618 right here. So looking for this at like 1672. It's building up a little bit of momentum. Doesn't look great. I mean, doesn't look, I almost said it doesn't look terrible, but it does look terrible. Bear market Couldn't even get back above the 21 right here. I mean, it looks terrible. It really does. Unity Software. We'll take a little break in a minute here, and I will engage with the chat, and then we'll get on to some cryptos and look at the commodities. So Unity broke down from that key channel, retested the 200 exponential, found support. I don't like this trade setup, guys. Doesn't look great. I mean, it looks like it could pop up here. Hard buy signal, bunch of green histograms. Maybe it does play out. 10% risk, 19% reward. See, I mean, that's like 2 to 1. So that's what we're talking about. There's better setups in the market right now. Like the company, don't love the trade setup or the chart particularly right now. But it does look better than most things. Most of the charts we looked at least in the sector. Corsair, just still getting absolutely hammered. The potential for the reversion of the mean test right here. Slope line is blue. Bunch of green histograms. Looks like the Stochs are trying to roll over right here. Could not cross the 821 back to the upside again. You know, again, 2 to 1 risk reward for the reversion of the mean play. You know, if we take out the low right here, timber. Yeah, it does not look good. But that could all change. And then you get $2 for betting with $1. Or we look at some of these other ones where you get $4, $5, $6 for every dollar. PayPal, consolidating, basically at the entry. Again, momentum play, building up, blue slope line, bunch of green histograms, hard buy signal coming out of the bearish control zone. I mean, this still looks pretty juicy. 20% upside, 5% downside. We got the stop at 178. We got the target to upside at like 225. We've got an over 4 to 1 risk reward ratio with the entry essentially just right where we're at right now. 180, call it 188.50. Very much looks like an Adam and Eve topping pattern. So I would not be surprised if this thing just goes much, much lower and gets absolutely wrecked. But there's some potential there. Square, it's just like a worse version of the PayPal chart, in my opinion. Broke down from that channel. Massive measure moves to the downside. I mean, this thing looks like it's ready to just... I mean, I was going to say it looks like it's ready to waterfall, but it's already like in a bloody waterfall. Clearly in a bear market. 200 exponential and simple rolled over. It looks terrible. Twitter, again, looks terrible. You know, I told you guys maybe there's something there, but I have no interest in this. Not interested in Square, not interested in PayPal, not interested in Facebook. No, thank you. There's plenty of other things, but maybe this ascending triangle, maybe there's a trade setup plays out here. You know, what, 4 to 1 risk reward ratio. Starting to build up a little bit of momentum. $41, $42. What is it? $41.91 for the stop at about 5% loss. 4x risk reward ratio. If breaks out of this little like double bottom ascending triangle, measure moves to the upside, reversion to the mean, 200 exponential and simple. Probably underperforms if it does. Runs into a bunch of resistance if it gets up there, but you know, it's like 20% upside, so 4 to 1 risk reward. I mean, it's there. eBay holding for now, rolled over, getting rejected. It looks like at least short term below 200 exponential and simple. We are seeing a slight bit of bullish divergence playing out between the little nub and here on the stochastics as well between these 2 points. You know, obviously have a lower low on price action, higher low on our indicator oscillators. We're at the entry right now. If we take out the low, we got our stop in at 62.85. We've got a target for the previous all-time high. Maybe it takes a little break along the way up there, but I think 81 is an attainable target. Entries right here at 66.50. Target to upside 21%, stop loss 5.7%, risk reward ratio like 3 or 4 to 1. I wouldn't get greedy with this one though. I would definitely be trailing the stop, potentially taking profits along the way. So Amazon, you know, broke down from 200 exponential, 200 simple. Red slope on this. I mean, this looks like it's rolling over. So we bounced the heart line and the 200 exponential a bunch of times. Now it looks like we're getting ready to let go. So probably bounce the heart line again. We've got a very clear ascending, a very clear horizontal support right here at like 31.81. But if we break down from that, we just get the measure move back to the bottom of the channel. And that's where I'm looking to enter. I don't think this is just going to break to the upside. I don't think it's just going to break to the downside. And if it does, I'm looking to scalp or take at least what will start off as a scalp, potentially end up as a long position, potentially just be a scalp and we're out of here as this goes into a bear market. We'll have to wait and see. But Amazon, I mean, it looks weak. And it definitely looks likely to head down to that 2860 target we're looking for. 2865, 2862, somewhere around there, 2880. Apple still looks very strong. Displaying some, not technically divergence, but man, I mean, it looks strong long term, but it looks like it's trying to. I mean, it could easily just burst and keep moving to the upside, but you gotta be careful. If this thing breaks down below 168, it looks like it's gonna go much lower, at least to 145. If it breaks back above previous all-time high 181, it probably goes to 200. I mean, this thing. Let's be real. Apple's going to a $3 trillion market cap, and then afterwards it's like, we did it. All right, sell. I mean, in my opinion, nice round, juicy number, $200, $3 trillion market cap, and then take profits. Facebook could not make it above the 618, could not obviously get up there for that measure move. It is still consolidating above the 200 exponential and simple. Definitely looks like a W bottom, W double bottom, a W double bottom potential. But it could easily come back down here, and then it looks like an inverted head and shoulders. It could easily just dump and go straight to zero. We'll have to wait and see. Hard sell signal, bunch of green histograms above the blue slope line. It's still okay for now. As far as I'm concerned, if it breaks down below 327, it's going to start looking sketchy. If it breaks down below 312, it's going to look sketchier. If it breaks down below 306, probably goes much lower. I mean, it's still not even that low, though. There's so much chop along the way, too. I mean, if I didn't hate Facebook, yeah, I mean, it could go either way, but we didn't want to see this rejection right here, but we knew that was a rejection candle. That was a shooting star rejection at the 618 and the previous top. So, we're holding on to 200 exponential and simple, but, we talk about this all the time. When we hit 200 exponential and simple, if we're above it, we expect it to catapult us away from it and say, get the hell out of here and keep going up. If we're below it, when we come back up to it, we expect it to reject us and say, get the hell out of here, keep going down. So this, to me, does not look like a get the hell out of here, keep going up. It looks like a consolidate, 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 fall off the table. Google looks pretty good. I mean, Google and Microsoft, like pretty much the strongest things out there, with the exception of maybe like Nvidia, AMD. But, I mean, it's a couple of these stocks holding up the entire market. So, but it does look tired here. It does look tired. I mean, it's starting into at least a short-term, like kind of daily downtrend situation taking place here. So, as of now, not necessarily like macro looking bad or anything, but we're definitely in some sort of like descending channel consolidation type pattern. So it looks like we're going to head back down here, probably find support somewhere around like that 27.71, and then creep back up here to right around where we're at again. And then, eventually break. Typically, this will break back to the upside, but, we don't know. It could obviously form something different. But right now, it looks like it at least has a little bit of downside potential. Microsoft looks very similar, slightly stronger. We got, basically the same thing playing out right here. So again, same thing. If it breaks down below 320 area, probably goes to 305. If it breaks above 350, 340, whatever, it probably just keeps ripping to the upside. But definitely losing momentum here, at least on the short term. Okay, DocuSign, then let's take a little quick break. So so obviously had that massive capitulation dump. No surprise. I was talking about how trashy this company is. I mean, this is not like going to change the world, in my opinion. Bear market, obviously, massive gap left behind. So just to retest the previous breakdown from support, 29%, to fill the gap, 60%. We take out the low back here and start printing lower lows, like below 134. Starts looking super sketch. But I mean, the risk reward on this is like 5-1, 10% stop loss on this, 6-1. Could you take a stab at it? Hard buy signal coming out of the bearish control zone. Bunch of green histograms, building up momentum. Looks like it's forming an ascending triangle. I mean, even if you just wanted to like play it safe and go with like the momentum breakout on this. I mean, now granted, I don't like to play breakouts just because a lot of times they'll be like fake outs or failed breakouts. But I mean, there's definitely something to be said about this, because if you just got, I mean, realistically, a breakout above 157 probably takes you just straight up to 186. So it's like a 20% move. But I mean, it probably happens in like pre-market or something like that. So you can't even take advantage of it. So probably have to be positioned ahead of time. Such a tightening range right now. It's like, do you just flip the coin at this point in time? And keep a tight stop. And if we break down here, I mean, what are you going to do? 2-to-1 risk reward ratio, 10. I don't know. Probably a little late on this one unless we get the big move, to tell you the truth. So, but I mean, I'm sure some of you guys already took this. I obviously not interested. So yeah, let's take a little break. I will engage with chat here real quick, and then I'll just grab a drink, stretch my legs, ban some bots. Get the hell out of here. Put user in timeout? No. Report user? I'm sure he'll probably just make another account anyway, but I don't think YouTube really cares. Or there would be less bots, and there's only ever more bots. What up, CW? Says, good to be seen. Bro, I always see you creeping in the shadows. 40% of XLK is in Apple and Microsoft. Yeah, oh yeah. Yep. And I mean, even it's you can see in these sectors, XLK, you can see it in the NASDAQ, you can see it in SPY, you can see it in Dow Jones. What is it? It's a handful of stocks holding up all these markets. I mean, it's basically Apple, Microsoft, Nvidia, AMD, a couple stocks holding up all this. Happy New Year to you as well, my man. Happy New Year to everyone. Welcome 2022, baby. Let's go. Of course, man. That's what I'm here for, is you guys. David Morale says, Happy New Year. Happy New Year to you as well, my friend. And then finally, CW. Just about everything looks like it wants to roll over. Yep, and that's what I mean about we're at an inflection point. I mean, beginning of a new year, we went parabolically to the upside over the last year or two. Massive gains in all kinds of stuff. Excuse me. Now all of a sudden we're seeing some weakness in crypto for the second time now. We're seeing gold showing a little bit of strength, a little bit of potential that maybe, people are going that safety route. Now rates are starting to push back up and save the trend. This definitely looks to me like we could be seeing some inflection points, some changes taking place. We'll go crypto next as soon as I take a little break and come back. But we've been talking about basically Bitcoin is literally at the point right now where if we don't go up, we confirm a bear market on futures and spot market. If we do go up, we could easily save it for sure. But we're literally we're sitting on the 200 exponential moving average on futures. We're sitting on the 200 simple moving average on futures, and we lost the slope on all of them. So we're literally about to confirm a bear market. And I'm going to tell you right now, I'm not the only one looking at 200 exponential or 200 simple moving average on the daily. I'm not the only one looking at the weekly 821 cross and the bearish divergence taking place on, total crypto market cap and Bitcoin. A lot of people looking at the same thing. A lot of people ready to that's a wrap it up. And one nice thing about selling in January instead of December is you get all year before you have to pay taxes. So you can put that money to work. So sometimes it's nice to, take those profits right in January, beginning of the year, as opposed to locking them in at the end of the year. Maybe lock a couple in, offset it a little with some losses that you have. And then what do? Just rolled over some of that crypto or whatever. Maybe there's regulations coming on capital gains. Maybe there's new crypto regulations coming. Maybe there's, they get rid of the wash rule. We'll have to wait and see. But a lot of headwinds for crypto, for stock market, anything that's basically affected by rates, risk on positions in general. So we'll see what happens. But yeah, I'm going to take a quick break. We'll just give it like 2 minutes. And then we'll jump back into it. We'll go right into crypto. So, I'm not going to go like super, super deep dive on everything, but we'll hit all the big ones. I had a couple of requests. If while I'm taking a quick break, if you want a crypto in particular looked at, or a commodity, go ahead and post up the ticker and what exchange or pair you want it on. So say for instance, you wanted Ethereum against Tether on Binance, just put ETH to Tether on Binance, and I'll be glad to take a look at that for you. So, but yeah, I'm going to take a quick break, and we'll jump back into it. All right, let's go ahead and keep this thing rolling. CW says, do you think the power consumption of crypto could be its downfall? Do you think the power consumption of crypto could be its downfall? Or is this just an issue for a few? I mean, I think here's the thing. If power consumption is an issue, then proof of stake becomes the winner. If power consumption is not an issue, then proof of work becomes the winner. If decentralized, I don't believe it's just going to be like one winner. And I don't think crypto is going away. I definitely don't think blockchain is going away. It's just a matter of, the weird thing about cryptocurrency, like many things, and like the ESG movement and all that stuff is, it's like, yeah, everybody wants to be like the noble, like white knight and like, oh, we're going to do this because it's good and, power to the people and this, that, and the other. But the second like the narrative changes or it doesn't fit your bill anymore, all of a sudden it's like, oh, well, I mean, who cares if it's burning more than most countries because it's freedom for the financial system. And look at how much money all the banks use and look at how much money all the gold miners use. And people just change their narratives all the time. So do I think that anybody cares about, energy consumption? Or do I think that people just are in crypto for money? There's your answer right there. Maybe in the future, though, when we have a bunch of excess power, we could use it for crypto. But right now, we don't. It's actually the opposite. Like lots of countries are struggling right now because they don't have enough power. So there's a strong argument to be made that even if in the future it's not going to be an issue, right now, probably not the best time to be like using record hash power and electricity, when, energy prices are at, well, depending on what you're looking at, but at all-time highs. So I don't think it'll be its downfall, like it's going to ruin it. It could shift the narrative from proof of work to proof of stake. It might delay the narrative of proof of work. But again, every crypto is like a trade-off. Do you want security? Do you want privacy? Do you want decentralized? Do you want speed? Because all those things are factors, and there's other ones too. But with each of those, you trade a little bit of one for a little bit of the other. So do you want to be really private? Okay, we could work with you. Privacy coins. Do you want to be really fast? Okay, we could work with you. Do you want to be really secure? Okay, Bitcoin. Do you want to be super decentralized? Okay, Bitcoin. Like, do you want to not use a bunch of electricity? Okay, maybe some smart contracts on Ethereum or maybe a Solana or Avalanche. So, it's just a trade-off in my opinion. I use this metaphor all the time or like example all the time, but, I love Bitcoin and, I'm far from a Bitcoin maximalist, but I also think that utility is important. So even if Bitcoin's utility was, supposed to be, a decentralized, payment without third parties, well, it's functioning as a speculative asset that technically, holds its value or increases in value faster than anything else. So maybe the narrative has changed a little bit, but it doesn't mean it has to go away. But the truth is, I think the real winners will be things that solve like functional, actual problems. And I don't think the problem is, where to put your money, how to jump borders, basically with, a seed phrase to stop it from getting confiscated. That's not a fear of mine. Maybe in the future it will be. Can you go on a plane and take a bunch of bars of gold with you? No. So there's a good reason to have crypto. But are you technically breaking the law? Sure, because the law is you can't, take your wealth out of the country without paying taxes on it or, without letting them know or, whatever. But at some point in time, does the government overreach so far that we have to decide that some laws are unjust and then you have to leave with crypto, for your own wealth preservation or safety or whatever? It's happened in the past. Think about how many times, governments acted crazy and confiscated people's wealth. It happened in the United States. It's happened in China. It's happened in, all kinds of countries throughout history. So is it unrealistic to think that the time may come when we have to, use things for Not like, I mean, technically illegal purposes, I guess so. But I mean, I don't know. We'll have to see how everything develops. Like for me though, that's everybody's main argument is, oh, well, you can take your money out of the country and nobody knows because you memorize your seed phrase. Sure, you can, but if you have a decent amount of money, there's a million different things where you're tied to that wallet address. So if there's enough money that somebody cares and they want to find you and everything's on a public ledger, like, what did you do? I mean, you can't just leave the country, not the United States, and then just be like, haha, I got out of here with my millions of dollars in Bitcoin, and now you'll never get me. So we have like extradition treaties. They'll come after your ass for like tax evasion. I mean, I don't know. There's a bunch of narratives right now. Some of them are going to play out. Some of them are going to look like geniuses in the future. But the truth is, if you're not like an actual like utility right now serving a purpose, you're probably not going to be a winner. And even if you are, chances are somebody else can come along and do it better. So, but you know, that's my opinion. So is power going to be the issue? Is security going to be the issue? Is centralization going to be the issue? Is, you know, privacy going to be an issue? All those things in different situations. And we really don't know. That's why I think it's a good idea to be diversified. Not only just in those various cryptos, but also in, you know, other markets as well. So Bitcoin futures chart on the daily, this is what we've been talking about. So we were talking about, actually, I think I was talking about it in the private group, but we closed the futures chart down here at 45,730. We pumped up back to the 200 exponential over the weekend. Basically went nowhere, just retested the breakdown. It's acting as resistance currently. We are below the 8, below the 21. We have the 200 simple rolled over to the downside, and now here we are at the 200 exponential. So literally, if we go any lower, this has a flat slope on it. If we go any lower, we're confirming a bear market on Bitcoin futures chart. For the first time since we confirmed our bull market, you know, way back here at like 8 grand. So that's not good. We're at decision point, inflection point. It's time to decide. You know, the bears have clearly been in control for the last couple months. You know, we put in a new all-time high and there was no follow through. You know, I'm not bearish now, but we're at the point where it's like, okay, if there's any bulls left, now's the time. So, you know, if you want to save crypto, now's the time. Dig deep, guys. I mean, not that any of us can make a difference, but maybe Mikey the failure sailor can do it. I don't know. We'll see. But looks like potentially bear market on the horizon. We're closer to a bear market than we have ever been since we got out of our last bear market. So do we have to go into a bear market? No. Does it look like a definite possibility right now? It does. It really does. I don't like how it looks. The 821 on the weekly has officially confirmed to the downside. I mean, this could push back up here to like over 50,000. And, you know, we have the weekly. We have all week to do it. So it doesn't just have to be over. But we got the hard sell signal. We had clear weekly bearish divergence, all red histograms since our rejection top right here. You know, our little shooting star action. Doesn't look good. The key areas to watch, 42.5 and, you know, weekly close below 31.8 on the futures chart. If we close below this one, we probably go to the next one. If we close below this one, we probably go to 200 exponential and simple. So that's the areas I'm paying attention to. Do we close below, you know, 42.5? Do we close below 31.5 roughly? And, you know, then we're probably headed to like 20,500. If we get back above 50,800, you know, then we start retesting some of these upside targets. You know, essentially, if we get back above 50,000 or so and consolidate, I think we go right back up to the high. So, but we'll see. I guess I'd look at the monthly since. So we closed at the 8, below the 8 technically. Second right hand, so there's nothing to see here. There's really nothing to see. We can't. It's not telling us anything useful. And then our Bitcoin spot chart, Bitstamp. Again, the 200 exponential has already rolled over. We're below 200 simple, 821 cross the downside. Hard sell signal. You know, we're above the slope line right now. It is still red, but it looks like basically a retest and rejection. And then typically, you know, we go lower. So if we break down below 46, again, we head down to 40,500. And if we break down from 40,500, we probably head down to 29,770. So there's still time. Bitcoin can still break up from here. It can still push up. But right now, clearly the momentum short term, the last couple of months has been to the downside. And again, we hit the moving averages. We expect a push back up, and it was pathetic. We come back down to them again. So if we don't get above 50,900, we probably go much lower. If we do get above 50,900, we start retesting these previous levels, and it's going to look a lot juicier. So there's still time, but I don't know what the bulls are doing. Maybe they're, getting all amped up, drinking that Mountain Dew, getting ready to bust out. But right now, it looks like the bears are holding them down, taking bites out of them. The bulls look like they're dead right now. Ethereum, so didn't quite get up to the top of that channel, but we're still operating inside the channel. Came back down to the bottom of it, almost to the 200 exponential and simple. So we basically hit the target to the downside already. We just underperformed the upside target. Not surprising. It's just going to do what Bitcoin does. It had a pretty solid push up, and then the second Bitcoin started showing weakness, just started getting rejected. So Ethereum's still strong, though, still above the 200 exponential and simple on the daily. So one of the stronger cryptos. But again, this is the main thing I'm looking at. We broke down from this channel that we've been in since March of 2020. Very clearly broke down from it. Now, we did peek our head out of the top right here and, got rejected and came back inside of it. So maybe that happens again. But, the next target to the downside, if we really break down from here on the weekly chart, the next target to the downside is basically 1,400. So, that's a pretty big haircut. Does it happen in one candle? Probably not. But, unless you're on Kraken. ETH Bitcoin chart, still holding outside the range for now in the bearish control zone. Looks like ETH wants to try to rally against Bitcoin. But this just looks like a descending triangle. If we break down from this 0.078 level, we probably break back down into the range and end up closer to the 0.07 level. So, but ETH is stronger than most cryptos right now. Definitely stronger than Bitcoin. Not by much, but a little bit. Total market cap on the weekly, very clear bearish divergence playing out. All red histograms. Slope line is flipped over red. We had a hard signal, sell signal here. We lost 60% of our value. We have a hard signal right here. So, do we lose 60% again from peak to trough? I don't know. I can't confirm we do for sure. But if we do, we go to 1.2 trillion. So we made it up to 3 trillion. So we'll be down 1.8 trillion from the top. So we're at 2.23 trillion now. So do we lose $1 trillion in market cap? Probably. We're closing below the 8 and 21 on the weekly. So what's crypto look like? $1 trillion less valuable. What does your favorite altcoin look like? What does Bitcoin look like? What does Michael Saylor's portfolio look like if the market cap loses $1 trillion? We'll see. Bitcoin dominance. So again, we're looking at that triple bullish divergence, telling us that Bitcoin is probably basing out off support right here, putting in triple bullish divergence on the weekly. So we have lower lows on price action. We have higher lows on the indicator oscillators, not the stochastics anymore, but on the TJD, TDMACD. So we probably retest somewhere up here to the range of like 45.6 if this plays out, and then potentially, start potential breakout retest of 200 exponential and simple. We'll have to see. Alts have been staying pretty strong overall. So Polkadot trying to cross 821 back to the upside. This is our 200 exponential and simple just now basically like populating. So we're technically at or above them. So Polkadot looks okay. It looks a lot like Bitcoin. It's at or above the 200 exponential and simple moving average. Hanging on. Hard sell signal. Histogram above the slope line. It looks like it wants to pop up right here, but it's going to be tough to get above like 32. If it does, it probably goes to 40. If we break down from here, though, man, I really should pull up a different chart, but we probably just sweep the lows like $24, and then we'll have to go from there. But it's just going to do what Biddy does. Chainlink, bear market below the 200 exponential and simple. Retest reversion of the mean, rejection. Again, back above the 8 and 21. Trying to build up some momentum, but it's really got to get back above like 20. If it gets back above $25, it looks okay. But for now, it's in a bear market. It doesn't look good. But if Bitcoin just starts skyrocketing and reclaims, none of this matters because they're just going to follow it. So it's really on Bitcoin right now. Regardless, some of these look better or worse than others, but it's really just up to what Bitcoin does. Because if Bitcoin starts pumping, these alts probably pump. If Bitcoin starts dumping, these alts are going to dump. Uniswap, again, bear market below the 200 exponential and simple, negative slope line. Bounced to 886 perfectly. Saw resistance at the 618. Saw resistance at the 0.5. It's back above the 618. So it looks like it wants to come up here and retest the 382. Polkadot looks like it's, or Uniswap looks like it's going to 22.23. If it can, if it breaks down below $17, it probably goes straight back down to 15.60. So is there a trade set up there off the 618? There probably is. I just don't know if it's going to be juicy enough. No, 13% stop loss, 20%. I mean, I guess we could tighten it up off that swing low right here. 6.7% with 20%. So 3-to-1 risk reward ratio. Okay, that could be okay. So if it breaks down below like 1690, we want to get stopped out 7% loss. If it breaks up though, from where we're at right now, it likely busts through the 0.5 and reverts to the mean, touches 200 exponential and simple, and the 618, 20% moves to the upside. It's giving us about a 3-to-1 risk reward ratio. So momentum in its favor, flipped the slope line over blue, touched the bullish control zone, came back down. Looks like it wants to bounce the Stochs right here. So this Uniswap play actually looks decent. Trading very technically. So reclaiming this 618, that actually looks good to me. Again, assuming Bitcoin doesn't just fall off a cliff. XRP, man, can you imagine? I went all in on XRP. Oh, everybody else got rich. I still live with my parents. Oh, XRP. That sucks, man. That sucks. Bear market. Trash bag coin. Still hasn't put a new all-time high. The only thing worse than XRP is cryptos that don't exist and Dash. And Dash also is terrible. I noticed that people that were hardcore shilling Dash when it was over $400 and still hadn't put in a new all-time high, this market cap, they're not talking about Dash anymore. It's so weird. They were like, oh, I'm buying the dip. I'm doubling down. I'm all in. Dash is the one. It's still going to explode to the upside. I haven't heard the name Dash in some time now. So are you ashamed? Are we just going to pretend like that didn't happen? Oh, you meant DoorDash? Like, huh? What? You know what I'm talking about. ADA, Cardano. Looks like trash here. Try to flip the slope line over. Try to get a little move to the upside. If this area holds, I think it does push back up to 200 exponential and simple. Didn't we have a trade set up on Cardano? Oh, I think it was this and then it underperformed. So what, we just take the same trade setup again? I mean, if it breaks down below... Oh, man, this is just such an underperformer. I mean, I wouldn't touch this. It just looks like trash. That's sushi coin. It got rejected off 200 exponential and simple. Exactly what I said. I literally said I expect to get rejected here and break down. So we'll see what happens. We're seeing weakness. It left the bullish control zone. The stochastics look like they're about to cross the downside. The 200 exponential and simple are rolling over. It's about to go into its first ever bear market. Still has blue slope line and positive momentum, but it's way, way up here in the danger zone. This is where I would be selling my sushi and taking profits, not buying into it. This could be the last chance to get off the train before it catches fire, runs into a dynamite factory, and blows a piece off the earth. So I'd be careful with that one. Some bad sushi could wreck your world. So BAT, basic attention token, actually looks pretty good. Still above 200 exponential and simple. Still strong, putting in a series of higher lows at resistance right here. Trying to burst to the upside again. I have no idea why everybody all of a sudden there's like momentum and people like BAT. This was like such an underperformer and late performer, but it was so easy to just get into this thing right before it burst because like everybody else got to have their fun except XRP, and then all of a sudden BAT would just explode. So doesn't look particularly bad right now, but it also doesn't look particularly great either. So probably does retest the highs. HTR Hathor to tether on KuCoin as per request. Looks very strong. Well above the 200 exponential and simple. Still an uptrend at that previous high right here. So we have a slightly higher high right here. We're retesting those highs. This sort of looking like an inverted head and shoulders. So if we just take a look at this, and again, in a space where most everything looks bad or really bad, the couple like strong cryptos are more likely to outperform because what happens is people just look and see what's up the most today. Oh, I'll just go buy that because no one cares about like technicals or anything or fundamentals. They're just like, oh, I want to just buy momentum. which is okay. At the end of like bull markets, that works. The measure move breakout is $3. So, I mean, I don't know if you're like already in a position on this one or what you're looking at, but I mean, we're basically pennies away from a blue sky breakout. Well, not pennies, $2.30. I mean, that's a 60% move to the upside, though. So, I mean, there has to be a favorable trade setup here. I mean, obviously, it would have been better to get in a little lower, but hindsight's always 20/20. It's still like 3-to-1 risk-reward ratio. 20% stop loss, though, 18%. 3-to-1 risk-reward ratio, 58% upside, 18.89% stop loss. I'm assuming you're probably already in this, but 1.54, $1.54 is your stop. $1.89 right here is your entry with a target of $3. I would probably front run it by a couple cents. But the truth is, if we just break above this the momentum probably just catapults this thing to the upside, honestly. But I mean, I would just trail my stop, because if it starts breaking out to the upside, it probably keeps running because it's probably going to have momentum, because almost nothing is like, there's very few things that are this close to their all-time highs. So yeah, it looks strong. I mean, you have like this basic attention token, a couple other like random shit coins like look okay right now. Most things look like trash. Matic's still strong, consolidating at the top of the range. Looks like it's running out of steam here though. I think it does come back down to our target, 786. I'll probably take another entry off like $2.15 and just ride it back up to like 289 again. Eventually it's going to break out of this pattern, but in the meantime, probably just take that same trade again, over and over again. So looking for an entry around like $2.15. And if it breaks down from here, I'll be looking at like that 160 level. But, it probably does find support and then heads back up to $3. Avalanche. Basically just a giant triangle, symmetrical triangle, flag, whatever you want to call it. Looks okay. Reclaim the 8 and 21 for now. So if this level holds, it probably retests 125. If it breaks down below 109, it probably retests 101. If it breaks down from 101, probably goes to 80. If it breaks down from 80, it's going to be in real big trouble. But I don't think that happens. I think it probably heads back up here to like $1.23. But if Bitcoin breaks down, it'll be down here at 100 real quick. But that should act as support. Solana. I mean, this thing is just tightening range right here, and it looks like it's ready to let go. The whole... Looks like the Solana movement might be over. That's all I'm saying. Looks weak. $154, next target to the downside. Upside is really got to get above 200, and that's going to be tough. MicroStrategy. So we're seeing that continuation. Basically got the pushback up, failed to get back above resistance. It was support, now it's resistance, getting rejected, going straight down here. I mean, it looks like it's headed to 468. And then after that, I mean, realistically, 468 should hold, but then 411, and then who knows after that. Michael Saylor exit strategy, I don't even know. Now with his most recent purchases, his average price is 30K. So if Bitcoin goes below 30K, get ready for the biggest exit scam of ever in the crypto space. Get ready for Mount Gox 2. We'll call it Mount Saylor, or Sailor Gox, or Micro Gox, or Sailor. No, I can't think of any other good ones. Sorry. If you think of a good one, post it up in the chat, and we can hashtag, Sailor Gox. Hood looks so bad. It looks so bad. Probably goes so much lower. Triple bullish divergence. You know what? This probably is going to get wrecked again. But, I mean, that's why we run that tight stop with that big fat risk reward setup. So, we'll see what happens. I mean, it's like a ridiculous trade. It's a 19-to-1 risk reward ratio. But it's literally like pennies away from getting stopped out. But then we can just re-enter. Eventually, it'll push up here. We'll just have to get stopped out a couple times in the meantime, probably. But it is printing some bullish divergence, so we'll see what happens. Probably a lot of tax loss harvesting in the old Robinhood. Coinbase looking weak here. Obviously, the short played out nicely. Started to pump up for that potential on the long. Got up there a little bit, but I don't know. I think it does probably head up here higher eventually. But if crypto just starts getting wrecked and this thing breaks down, it's probably going to go to new lows. So if it breaks down, like danger zone down here in like the 210s. If it continues to the upside, we're still looking for like that $300 price target. And we're basically right smack in the middle. So $40 to the downside or $40 to the upside. So basically, 7% stop loss if we take out that low down here and break down from the ascending broadening wedge. It is a 17.39% target to the upside. The 0.5 Fibonacci at roughly $299 with the stop loss at roughly $235 and the entry price at roughly right the fuck where we're at right now, $252. And risk reward is like 2.3 to 1. It's really just not even worth effing with right now. Bed Bath and Beyond, meme stock, dead. Headed right back down here. So anybody that didn't take profits on that trade, that beautiful 60 to 70% reversion to the mean trade, is right back at the entry price again. So terrible trash coin. I mean stock. Meme stock / vaporware coin. AMC looks bad. I mean, still could potentially fill out this inverted head and shoulders, trying to build momentum. This is the key areas to watch. We're basically we don't want to see this below 25. And if we broke below 25, we don't want to see it below 20. But we just have a high, a low, a lower high, a lower low. So, what happens next? Lower high, potentially about to roll over into a bear market. AMC your ass at 0 if this thing breaks down, guys. GameStop, bear market, 200 exponential and simple have rolled over. It's trash. It's garbage. You're going to hodl this thing straight to 0 or get out now. It looks like it's going to $100. Who knows when it's just going to meme stock to the upside, but it doesn't have any momentum. These meme stocks are done. Retail is like too ashamed to admit they lost all their money or, whatever. They had their hopes, they had their dreams in their hand, and they let it slip through their fingertips because they didn't take profits. Because they're hodling, because diamond hands, because we're the apes. We're a cult. DraftKings, terrible, new lows, at support. If it breaks down from here, it goes immediately to 0. $18. $18 target to downside. Looks terrible. Trying to carve out a double bottom right now, but it looks like it's rolling back over to the downside. So, and Bitcoin USD. I think we already looked at this. I don't know why I have multiple Bitcoin charts, but yeah, so that's our cryptos. We did it. We made it to the cryptos. Yay, hooray. I mean, I have to talk about gold since, gold could be eating crypto's lunch. And I only made that because everybody was like, crypto's eating gold's lunch. Gold looks strong here. It reclaimed 200 exponential and simple. But, I don't want to get too excited for this because it moved back up to the bullish control zone, reclaim momentum, reclaim the 200 exponential and simple, and it's probably just going to top out and roll back over. So do I think gold is about to go into a parabolic uptrend? Maybe. What's more than likely going to happen, though? Another one of these. Riding the roller coaster, trying to buy the breakout, and then it fails. But it did flip the slope line over blue again, so it's got some momentum. I don't know. It did the exact same thing back here in 2012, right before it rolled over and lost like 50% of its value. So flipped the blue slope line over right here and then just rolled over on the weekly. I don't hate gold. I mean, I would love for gold to just go to $10,000, but do I think it's going to happen? Is it realistic? Are the charts saying gold's about to go to 10,000? Or do we see a bunch of red histograms on the monthly when it topped out last time in 2011 and then went into a multi-year bear market? And we see a bunch of red histograms in a row and a hard sell signal leaving the bullish control zone and the Stokes angle powerfully to the downside and we have lost the slope line. We're under the slope line. It's still blue for now. Still blue for now. But I don't know, gold. Doesn't look good. And you know what? If I was a central bank, if I was the central banks, I wouldn't want gold to start pumping to the upside. And then everybody's like, oh my God, the inflation hedge. It's working again. The gold trade is on. The inflation, the hyperinflation, it's out of control. Everybody buy gold. Fiat currency's collapsing. If I were in charge, if I was the big bankers and, the 1%ers, the 0.1 percenters, I wouldn't want, if I was the central banks, I wouldn't want gold going parabolic. Because that furthers the inflation narrative and scares people. So if you think there's manipulation in the gold and silver prices, there's probably going to be more manipulation. If I had to guess. It's manipulation. Silver, carving out that double bottom, reclaim the key support line. I do expect silver. It looks like it wants to push up here to like 24. 24 24, then 24.70, then 25. Then it's just going to look like a giant W, and then it probably goes to 30. But I think it probably just rolls over here and consolidates for a bit and just waits on gold. So if it breaks down, it goes to the teens again. If it breaks up, we got targets at like 24. There's just so much chop now. There's so much chop here, and we're at the bottom of the range. It's like I was just saying with some of like the random garbage stocks or like shit coins or whatever, is, you know, this is just all resistance now. There's just all this cult of just people who bought silver thinking they were going to get rich off it. Silver's clearly in a bear market that has rolled over, got rejected. It's at the bottom of the range, and there's just a massive amount of people that bought through this range while there was distribution taking place, maybe. While there was accumulation taking place, maybe. But, I mean, this thing hasn't even come close to its all-time high, you know, in a long, long time. So, got plenty of time before silver just explodes to the upside. Yeah, but there's a shortage, and they need the silver because the solar panels, and we got to buy the stuff, and Miles Franklin, and just when the guys who are trying to sell you the silver tell you about how much silver demand there is and how there's no silver, look the other way, because they're probably grabbing your wallet out of your back pocket. You know. But what do I know? Why do all the silver guys look like they aged 20 years in the last 2 years? Like, what the hell? Guys, relax. Y'all are going to die before the silver bull market ever gets here. They're like, oh man, if silver doesn't go to $30, I give up. You're going to die of old age. You guys look like you went from 40 years old to 60 years old in the last year. Like, you need to get some sleep, bros. I'm not going to call out any particular guys, but goddamn, y'all. These silver influencers, y'all looking rough. Y'all looking like the fucking crib keeper up in this bitch. You're going to have to go to just voice chats from here on out. You can't even Skype anymore. You're going to have to go to straight green screens and just put a picture of what you used to look like up there, like Mike Maloney. And don't get me wrong, I like Mike Maloney. That's my boy right there. He's got that diversification. He's not just about gold or silver or crypto or stocks. He believes in all of it. But he's also sound money principles. Of any of those guys, he's the one. But anyway, gold-silver ratio. Again, gold-silver ratio is in a bull market. It is back on top of the 200 exponential and simple, powerfully sloped to the upside. So if I was going to buy gold or silver right now, one or the other, I would be buying gold. We have reclaimed the 200 exponential. We hit our head on the 200 simple. We're consolidating. Next target is back up to that 200 simple again. And then I think a breakout to the upside. I think it's going to be 90 silvers to 1 gold here real soon. And we're at 78. So maybe you buy some gold right now. Maybe you trade them for some silvers in a little bit. Maybe I'm just talking out of my ass and I don't know what I'm talking about. Doesn't matter because it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. XPT, that fatty platty, double bottom, looks terrible. Bear market probably does push back up here to like $1,000, but got to be careful with platinum. This thing could get absolutely wrecked. Copper finding support off 200 exponential and simple, probably does explode up here to like 28.68. Who knows after that? Technically a bullish pattern consolidation. LIT, that lithium battery ETF. It's holding for now. Got to be careful. It really needs to get back above this orange resistance / support at 86. But if it breaks down below 78, I mean, it's got the 200 exponential and simple, hard buy, a bunch of green histograms. It probably is going to come back up here and try to retest the highs. So, hydrogen, getting wrecked, new lows as expected. Again, this thing just looks terrible. Buy, sell, buy though. It probably does have another jump up here. It probably does another one of these things. So what does it do? Come up here and put in a new high? Come up and put in a lower high? It probably goes to like 25. So maybe 20% upside. Could run a tight stop on this and have a little fun. Oh, we have one in play. Okay. Okay, I see what we're doing here. Yeah, I mean, realistically, you know, if we close below that 1990 mark, that previous low right there, we want to be out of this trade. But what is it? 17% upside, 5% downside? Yeah, I mean, it's not bad risk reward. 3.5 to 1. So, and that's just a retest of that. I did not actually enter this trade, but it actually does look juicy. And we're technically slightly lower right now, so we can actually get a better entry. So it probably is worth taking a shot. Oh, I know I didn't enter it because it was the end of the year and I said I wasn't going to take any new positions. until the year rolled over. So now it's 5.4 to 1 risk reward ratio. So yeah, if it breaks down below, like let's say I have it at 1990, but it closed below like 1974 or something, no round numbers, and we're getting out of this, target to the upside like 2465. Risk reward ratio is like it's 19% upside, 4% downside. So basically 5 to 1. Looks pretty juicy now. LBS1, that lumber, those lobsters, the lobster futures, looks strong here. Still looks strong. Putting in some bearish divergence, could easily invalidate. Looks like it wants to just keep ripping. This is fully speculative though. It's not like there's some mass demand for lumber right now. It's actually the opposite, especially wintertime. USAS, I mean, let's see what happens with these miners. Let's see what happens with the spot gold market and stuff. These things may be bottoming and ready to just explode to the upside. So we have like a 95% and 250% potential target to the upside. So we're talking about risk reward ratios of like 5 and 12 to 1. Or it just goes to 0. So Tilray, obviously just bleeding out still. Maybe these pot stocks bottom out here, but we got to see something from them. I did take a Hexo position, as discussed, as mentioned. I think I posted that up in the trade group. If not, I will post that up. I mean, you're not going to miss anything. I'm sure it'll just go lower. So, but you know, these things are at deep value territory. I mean, it's ridiculous. Like the asset to book ratio, or value to book ratio right now is like just absolutely ridiculous. ACB, again, and I mean Tilray, ACB, Hexo, they're all the same way. I mean, it's crazy. Like netbook is just absolutely out of control. It's like 66% on these things, trading at like a 30+% discount right now. So unless there's some funny accounting tricks, we're getting a good deal. As Warren Buffett would say, we buy things when they're cheap and we sell them when they're expensive. Definitely in a bear market though. Probably just continues to downside. Maybe goes to 0 all the way. I don't know. CGC, Canopy Growth, again, just Wreck City, just getting absolutely crushed. You know, catching a falling knife on these things, but URA, uranium, back down 200 exponential and simple, starting to roll over here. Doesn't look great. I mean, we're at the target area. Do they find support here? Man, I really think these miners are overvalued right now. I really do. They had some nice run-ups, but I mean, I think these trades have played out for now. I at least want to see them develop some. I mean, they came straight back down to 200 exponentials in silver. They and simple. They look like they're gonna roll over at support right now. So it's make or break. So you maybe a good time to take a position on these because you know you're wrong real quick if these things break down. Caterpillar barely reclaiming 200 exponential, 200 simple has rolled over. This looks like it wants to go into a long bear market and get absolutely wrecked. So Deer looks even worse now. Now it's barely hanging on to 200 exponential. 200 simple has rolled over. You know, this does not speak well for like industrial and infrastructure and all that. You know, farmers, all the important people that actually make and build things. Their sector doesn't look so good. The speculative stuff looks good though, but eventually the speculators are wrong. AM, Antero Midstream Corporation, looks like it's about to roll into a bear market. This thing looks rough. Trying to build up a little momentum, but it just looks like it's ready to roll over. Cemex trade is playing out nicely. We got the reversion to a 200 exponential. Still got target up here at 200 simple at 742. On our way up there. Again, another like 4 to 1 risk reward ratio play. We're the majority of the way up there. If we break down and start closing back below 650, I'm just going to take profits on it. But it looks like it wants to creep up here. We'll see what these markets do, though. I mean, we could see strength going in the new year for a couple days, and then all of a sudden they just fall on their face. We could see weakness at first, and then they just pump all year long. We could see just straight up chop and no clear direction and just rotation. Ford, creeping, still going. I closed a lot of my Ford position, but also just because I had to rebalance because it was just, I mean, it like tripled. So we'll see. I took quite a bit of profits through here. If it doesn't reclaim the bottom of this channel, though, it's probably going to roll over. So, but I don't know. I mean, it could easily lose 15%, but then it would just look like maybe a buy again. So we'll have to see. GM starting to look pretty head and shoulders-y. Don't love how this looks. Definitely looking like the old textbook off the 200 exponential and simple moving average too. That's how it happens a lot of times. Bounces that 200 exponential and simple, puts in that same high, double top, comes back down, starts to lose momentum, and then just bam, measure move to the downside. So, and that's our target at the 236 at $45. So, I mean, again, just once it broke down from this channel, it just has not looked good. Has not looked good. So Hasbro got that move back up above 100. Looks okay for now. If it consolidates up here long enough, it probably does go to the upside. So we'll see. I don't know. I'm still not buying it. So work's still just getting absolutely freaking wrecked. Hanging on by a flea's pubic hair for now. But look, I'm about to just chalk this one up. If we go in, I don't think we could have gone any lower without chalking that one up for the big L. But still 44% target to the upside, 8% stop loss, 5.8 to 1 risk reward ratio, building up momentum, hard buy signal. Looks pretty juicy actually right now. So maybe that was the squeeze. Double bottom. Maybe that was the squeeze. So that could look legit right there. And then any sphere is almost down to our target. We're getting so close at this point in time. We're basically retesting that red breakout as support right now. We have touched potentially, we entered our target. I mean, we were saying back here when we closed the position at the 382 at $9, this thing could lose 60% of its value, and then we look to rebuy it, and that's where we're at now. So this is looking pretty juicy for a potential macro head and shoulders bottom off the bottom of the channel, off of the red, what was resistance acting as support line. So do we take a stab at this bad boy now and just get back in it to win it? I mean, yeah, this thing looks juicy. I mean, obviously we could have a little more casual. What is this? We could have a little more of a casual target. We don't have to go all or nothing on this. Dear God. I'm not even going to be able to make a trade setup for this. All right, there we go. Oh my gosh, are you serious? Come on. There we go. Okay. So if we break down out of the channel, we're looking to get out with like 20%. But a move back up to the 0.5 is 791%. I mean, this thing probably goes to zero. Let's keep in mind, it's been in a downtrend for its whole life, and it's trash. It's definitely trash, judging by the chart. But, I mean, the risk reward at this point in time for another juicy slay is looking pretty good right now. So 16% stop loss with the entry at like, what, 312 right now. Target to the upside is $28, and we're talking about a big, thick 39 to 1 risk reward ratio. And then if we get up to the 618, we're talking about a 2,430% gain. This is crypto money with a 20% stop loss. We're talking about 123 to 1 risk reward ratio. If I came up to you and said, hey, you want to flip this coin? If you're wrong, you got to give me $123. But if I'm wrong, I'll give you $1. That sounds like a shitty deal, doesn't it? Well, what if it was the other way around? What if you got the $123? Starts looking pretty good. So, do you bet $1 to make, 40 or 123? Could be worth a shot. Could be worth a shot. But or you could go, 2 to 1 on some other shitty trade setup we saw earlier. So, but that's it for today, guys. I appreciate everybody tuning in. Hopefully y'all enjoyed the stream. Happy New Year to everybody. Happy 2022. About to kill it. If you're interested in the indicators or trade group, let me know. Couple new people joined the group recently. Got the indicator, all that good stuff. It has gone to just one flat payment. I appreciate everybody that shows me support. I am finishing up actually a new iteration of the Jewel Thief as well. You can get right now all the indicators for free except for the TJD Master, which is the main one I use. Obviously my newest creation. You can get a couple iterations of the TJD, TDMACD, Stoch Slope, Jewel Thief, bunch of other stuff on there. But I have a brand new edition of the Jewel Thief coming out. Maybe I'll rename it something different. Maybe I will keep it the same. I don't know. But it's dope. It's simple. It works. It's beautiful. It has everything that's on my chart down here that is missing from the published versions. All the hard buys and sells. All the good, juicy stuff on here. It has the knife. It has all that good. And once again, I will be offered exclusively the new edition to the members of the trade group. So if you'd like to support the work that I do, if you want to support me, if you want to support the channel, if you want to make a one-time contribution and reap the rewards of my awesome indicators, feel free to do so. Reach out to me. You can email me or shoot me a message or holler at me in chat. So. But that's it for my little pitch today. Hopefully everybody enjoyed the stream. Looking forward to any new group members. Looking forward to the gains this year in 2022 as we absolutely dominate these markets. I appreciate you guys who are in the chat there. CW, thank you as well, brother. Honkiness, good to see you, my man. I appreciate you jumping in, saying what's up. I might have missed a couple things. Oh, Edward said LOL. What's up, Edward? Good to see you, brother. But that's it, guys. So 2022, let's get it started. About to wreck these fucking markets. About to get this easy money. About to take it. About to take the market's money. 2022 is going to be a good year, regardless, okay? Because we're going to put all this other bullshit behind us. We're going to go back to semi-normal life, and we're going to absolutely dominate whatever the bull market is at. I don't care if it's crypto. I don't care if it's stonkaroonies. I don't care if it's the pot stocks. I don't care if it's fucking gold, silver. I don't care what it is, okay? If Beanie Babies go back into a bull market, put me down for Beanie Babies. I'll put them up in my window and I will drive around town with my $1 million Beanie Babies in the window flossing, okay? I'll do it. People still do it to this day. It's usually old ladies and they're not worth anything. But hey, you know what? Power to the people. Okay, but that's it. I'm out of here. Crypto Trend Trader with our Sunday evening market look ahead. Everybody take care of yourself. Take care of your family. Have a good one. Enjoy this 2022. Set some goals for yourself. Draw a line in the sand and say, this is what I'm going to do. This is what I'm not going to do. And I'm going to crush it this year. But that is it for today. It is Sunday evening on January 2nd, 2022. It is 10:36 p.m. Eastern Standard Time. I'm Crypto Trend Trader. And I'm getting the F out of here.